protecting investors' interests. In 2015, SECP demonstrated its commitment to global standards by volunteering for an assessment of the implementation of IOSCO's Objectives and Principles of Securities Regulation. Pakistan's 86% compliance with the said IOSCO's principles shows the robustness of its capital market infrastructures. The approval of the Securities Act in the same year further modernized Pakistan's capital markets, ensuring the efficiency and alignment with contemporary demand. The Pakistan Stock Exchange emerged as the sole national exchange in 2016, achieving significant milestones. Since then, including self-listing, the upgrade of its sophisticated electronic trading system, and major institutional and regulatory reforms. PSX is a member of the World Federation of Exchanges and is a signatory to the UN Sustainable Stock Exchange Initiative. With a market capitalization of over 45 billion and 50% of its listed stocks being Sharia compliant, PSX offers a range of Sharia compliant investment products such as indices, ETFs, REITs, Mudarbas, corporate and government sukuk, and a dedicated platform of Sharia compliant trading for expatriates. More than 70% of the market value is traded in Sharia compliant stocks, demonstrating strong demand. Despite being one of the top 3 Asian markets over the last 5 years, with an impressive annualized return of over 7.5% in USD terms, it still remains one of the most undervalued markets in the region, with a low price to earning ratio of 5 times and high dividend yield of over 10%. For 3 consecutive years, 2021, 2022 and 2023, PSX has been awarded the title of Best Islamic Stock Exchange by the Global Islamic Finance Awards. In collaboration with other capital market players, PSX launched a revolutionary platform last year to help the government raise Sharia-compliant funding. The initiative has not only allowed the government to raise $5.81 billion at a lower cost than conventional borrowings, but also helped them reach a broader investment base. The Central Depository Company of Pakistan (CDC) and the National Clearing Company of Pakistan (NCCPL) provide vital capital market infrastructure. CDC is the sole depository in Pakistan and serves nearly every segment of the financial system. It holds the largest national-level database of assets over $45 billion. CDC provides fully digitized solutions such as the RDA platform to facilitate expatriates' investments, a digitalized bulk dividend payment system, and a seamless onboarding process for investors in mutual funds and various asset classes, all through multiple intermediaries in a single setup. Additionally, it acts as a share registrar for more than 300 securities. Due to its significant contribution to the financial landscape, the CEO of the CDC is honored with the esteemed position of Chairman of the Asia Pacific Central Securities Depositories Group and board member of the World Forum of Central Securities Depositories. NCCPL, on the other hand, provides clearing, settlement and risk management services that meet global standards for all trades in the cash, derivative and debt markets of the Pakistan Stock Exchange. Additionally, it supports intermediaries by providing value-added services including an institutional delivery system, unique identification number, financial institution managing system, securities lending and borrowing, and national custodial services. NCCPL also provides cutting-edge platforms for both conventional and Sharia-compliant financing. It manages capital gain taxes for all listed securities, mutual funds, and commodity investments, handling the computation, collection, and deposit into the government treasury. Additionally, NCCPL serves as the centralized KYC registration organization for investors in the capital market. Pakistan embarks on this transformative journey with a strong foundation rooted in Islamic principles and driven by the resilience of its people. Together, we aim to realize a future of economic justice, innovation, and prosperity, fulfilling the vision of our founding fathers. To support this transformation, The SECP has developed a strategic action plan through extensive stakeholder consultation. The roadmap aims to modernize regulated sectors, align them with global Islamic finance standards, and meet the demands of a dynamic market. The second International Islamic Capital Market Conference will focus on the future of Islamic finance, emphasizing technological innovation and sustainability. With this forward-thinking approach, Pakistan is set to enable Islamic finance across all sectors, leveraging technology to drive growth and secure a brighter, sustainable future. Let us seize the opportunity to shape the future of Islamic capital markets in Pakistan. By embracing innovation, championing sustainability, and building a financial system that reflects our shared values, we can position Pakistan as a global leader in Islamic finance. Together, we can build a brighter, Sharia-compliant future for all.
markets, innovation, sustainability, and regulatory landscape. For that, I would like to invite the moderator of the session, Dr. Mughis Shaukat, who is a senior manager at Accounting and Auditing Organization for Islamic Financial Institution, Bahrain. Dr. Samia Salim, Acting Director General, Islamic Development Bank Institute. Dr. Sami. Mr. Umar Mustafa Ansari, Secretary General, Accounting and Auditing Organization for Islamic Financial Institution. Mr. Umar Mustafa Ansari. Dr. Abedin Adiyami Adiwale, Acting Assistant Secretary General, Standard Implementation at IFSB. Dr. Mehmet Edogmas, Director, International Relations, Borsa, Istanbul. Please. I would request all to please take your seats so that we may start our session. Now, I'll hand over the mic to Dr. Mughis Shaukat, and over to you, Brother Mughis.
Auzu billahi minash shaitani rajim. Bismillahir Rahmanir Rahim. Assalamu alaikum to all of you. And as we start this very powerful session to further continue this very prestigious conference on very important theme of Islamic capital markets. Ladies and gentlemen, it is an honor for me to host this very distinguished panel as we explore the future of Islamic capital markets, an area brimming with potential yet requiring thoughtful navigation. Islamic capital markets, ladies and gentlemen, are the cornerstone of the future growth and sustainability of Islamic finance in an amplified fashion. It provides a platform for mobilizing funds ethically, fostering economic stability, and supporting development in the alignment with Sharia principles. Key products like the Sukuk, Sharia-compliant equities, and Islamic investment funds offer an innovative solution to meet the diverse needs of individuals, institutions, and governments. These products not only attract socially responsible investors, but also serve as a powerful tool for infrastructure development, green financing, and overall financial inclusion. What I've noticed over the last couple of days of my stay over here in Karachi, it elates me at a personal level as well as otherwise to note that the tendency of looking towards Islamic capital markets as an important segment and trying to create energies and invest energies to activate this very important segment. I noticed from the central bank, even from of course, SECP, and even the industry seems to be getting up pretty well. This is why it is quite apparent, and this conference epitomizes the same, that the role of NBFIs, MSMEs, IPOs, venture capitals, and hence the SECP is going to be extremely important moving forward. The future framework of Islamic capital markets lies as a result essentially in the intersection of innovation, sustainability, and a robust regulatory framework. This is why this panel holds of importance even more not only for the conference and its themes, but what these very noble experts from the local and international arena will have to submit and ponder on as key takeaways moving forward for Pakistan and SECP. Without further ado, let me introduce my esteemed panelists while we wait for the other two to join. On my immediate left, I have Dr. Abidin. Dr. Abidin is the Acting Assistant Secretary General of the Islamic Financial Services Board in Kuala Lumpur, Malaysia, another standard-setting body, an important one on top of it. He specializes in Islamic finance research and standard implementation, with a PhD in Islamic finance from IIUM and extensive academic and professional expertise. He has already led key initiatives like the IFSI Stability Report and the PSIFI database advancing global Islamic financial stability. Dr. Abidin, a warm welcome to the stage and a warm welcome to Pakistan and this very prestigious conference. We look forward to hearing you. To his immediate left, Khush Galdim, Dr. Mehmet, our brother from Turkey. Dr. Mehmet is currently the Director of International Relations of Bursa Istanbul. He's a finance expert with a PhD from Istanbul University, serves as the managing editor of the Bursa Istanbul Review, a very prominent publication, and leads the OIC exchange forums. With experience at Bursa Istanbul and the World Bank, he specializes in strategic planning, investor relations, and Islamic finance. He holds advanced capital market and governance certification, and of course, is a worthy candidate and a representative to be on stage with us discussing this very important theme. As I've mentioned in my intro, that the future of Islamic capital market lies at the intersection of innovation, sustainability, and a robust standard and regulatory framework. Ladies and gentlemen, let's also try and welcome our other two esteemed panelists on the stage. We have Dr. Sami Al-Suwailam. Welcome, Dr. Sami Al-Suwailam. The stage was not complete without your presence. Dr. Sami Al-Suwailam, ladies and gentlemen, you've already heard him in the opening session of the conference. He is the serving acting Director General of the Islamic Development Bank Institute in Jeddah, Saudi Arabia. He brings extensive expertise in Islamic economics and finance with a PhD from Washington University and leadership roles at the institutions like Al-Raji. He has authored numerous publications and contributed significantly to the field of Islamic finance. I have the pleasure of continuing to be, rubbing shoulders with him on a number of items that we synergize on and look forward synergizing on. And to be honest, while I keep on learning from him, he's an extremely important, panelist that we have right now on the stage, very right one to discuss this very important theme of the futures of Islamic capital markets. To his immediate left, I have, the utmost pleasure to introduce to you Mr. Umar Mustafa Ansari. Mr. Umar Mustafa Ansari, ladies and gentlemen, a very able entity in the whole Islamic financial sector, is currently the Secretary General of IOFI. He is a leading expert in Islamic finance standard development with extensive experience in assurance, Sharia audits, and advisory services. A fellow chartered accountant, he has authored several books, led key regulatory initiatives, and contributed to the development of Islamic financial standards. He's a sought after speaker and a trainer at international forums, my own very dear brother as well, and my colleague as well. Brother Umar, we welcome you, and we also look forward to you welcoming us to your own city, inshallah ta'ala. All right, okay, so since the panel is totally complete, may I have the pleasure to invite none other than Dr. Sami Al-Suwailam to regale us with his thought process and deliver his khitab or speech on the important issue of innovations and going forward in Islamic capital markets. Dr. Sami. Yeah, so it is a panel, but first there is a set setup where we ask each panelist to share their thought process. Once that is done, then we go extempore.
Is it here? Okay. Thank you, Brother Mughith, and thanks to Securities and Exchange Commission and other partners in this very important event. Innovation is extremely important, and it is obvious that, we are all familiar with the saying that the kid, before they join the school, they have the highest rate of innovation. And then by the time they finish their, formal education, the rate of innovation goes, dramatically down. So in general, the youth are the most innovative, segment within the society. And they are also the most receptible for innovative ideas. Companies like Apple and other innovation leaders, they usually target those segments of the society because they are more willing and more capable of adapting to new ideas. So the youth are the source of innovation, and they are also the most willing to accept innovations. So the more we invest, I think, in our youth, the more we are actually building for the future. I'm just extending some comments on the remarks I made earlier this morning. So if you look at the official numbers of entrepreneurship in our member countries, you will find it very low relative to the global average. But what we know from our member countries is that they have very high potential abilities for entrepreneurship. So that is where I think we should be focusing, building a complete ecosystem for the entrepreneurs, starting from learning, mentorship, moving on to innovation hubs, to startup incubators, using social finance like Zakat, Awqaf to provide seed capital, and then moving on to venture capital industry, formal venture capital, where hard, so to speak, capital is invested. And from there, we move on to, the larger exit strategies for those venture capitalists. I did my PhD on venture capital in 1995. And when I returned to Saudi at that time, no one heard about venture capital. That was the first, and we were struggling to translate, how to translate venture capital to Arabic. At the time, we thought رأس المال المخاطر. But I remember when I was defending my dissertation at Washington University in St. Louis, one of the discussants, he was from the business school, and he felt that I was probably too enthusiastic about venture capital and how could it promote growth and stability at the same time and this and that. He said, all these things are good, but don't you think that venture capital requires a system, requires an environment, requires regulations, and so on and so forth? I said, yes, of course. I realized that what he is pointing to is that while this model of financing is very important, you have to have an ecosystem. So that's what I think we should be focusing. If we want to invest in the youth, we have to have an ecosystem for that. And this ecosystem, as I said, includes, it starts with learning, education, and then innovation hubs, startup incubators, seed capital through social finance, and then venture capital. And within all that, of course, we should have a proper system for regulations that would protect all parties involved. I think these are good enough to start with.
I think these are very, very important and pertinent moot points that you have submitted, dear Dr. Sami. And as a matter of fact, I go back to a yesterday meeting that we were having with the chairman SECP as IOFI, and one of the items that was discussed, how SECP can support and play its role to further venture capital in the country, which is again a very rightly touched upon, and we'll deliberate further on this. Dear Brother Umar, look forward hearing your thought process, and I'm sure, I mean, while at personal level we have a lot to discuss on this topic, but let the audience globally as well as what we have over here also get benefited for your thought process.
Thank you very much. A'udhu billahi minash shaitanir rajeem. Bismillahir rahmanir rahim. Rabbi shrah li sadri wa yassir li amri wahlul 'uqdatam min lisani yafqahu qawli. First, I would like to thank SECP for taking the initiative and working with us, alhamdulillah, for this second time, and Islamic Development Bank Institute to be part of this, alhamdulillah, as a great initiative towards something that is needed at a larger scale globally. And we are willing and we assure our resolve to work together with SECP and other capital market associations and securities commissions around the globe to help develop the Islamic capital market. And I don't want to repeat that thing that has been mentioned by our Honorable Chairman and Honorable Chairman of Securities Commission, that the real, and even the Deputy Governor of the Central Bank, that the real Islamic finance concepts are more closer to the capital market and can more be achieved through the capital markets. And this is a bit unfortunate that at this point of time, we have been focusing significantly on the Islamic banking and not even enough on the Islamic capital markets. For sure, we can see, okay, there is a big number appearing for Islamic capital markets as well. But if you see that major part of that is coming as sukuk, and sukuk again at a lot of times when we listen to our respected brother Irfan Siddiqui, that it's actually to some extent a need of the banking sector to have sukuk for liquidity management, and to some extent it's just a replacement of the government debt, and it is not still being utilized for the intended purpose that it has, including some of the points that our Honorable Chairman Sheikh Ibrahim Al Khalifa mentioned, that the potential of sukuk is not being utilized properly. But we are talking about right now sukuk, but I would like to take you to Islamic capital markets in general, that the potential of Islamic capital markets for the economic development in line with Sharia principles and rules is grossly unutilized, grossly untapped, and this is where all the standard setting bodies around the globe on Islamic finance, all the Islamic finance regulators, the capital market regulators need to come together and work on that part. I have a couple of points related to that. The first thing is infrastructure. One infrastructure is the technological and physical infrastructure, but I would believe that the more important infrastructure is the sort of soft infrastructure in form of enabling environment, appropriate regulations, adoption of right set of standards, and making things available so that everybody is not pushed to reinvent the wheel every time. We have huge learning experiences at the global standard setting bodies like AOFI and IFSB being represented here. Alhamdulillah, these bodies have worked greatly on the, not only on the banking, but also on the capital markets. But yes, still there is need to work on, but the more important part is towards developing that enabling environment on the soft side through adoption of appropriate standards, development of right regulations, and providing the testing opportunities in form of sandboxes, etc., with regard to the new technologies coming up that are the new face of. I believe that for me, the new face of capital market might be completely changed to crowdfunding. The new face of sukuk may be completely changed to digital sukuk platforms. And that is where we need to work together as regulators and as standard setting bodies. And this is one of the most important parts that I wanted to touch upon. Another very important thing that I want to mention is that this transformation phase in Pakistan is a very crucial step. and nothing can be achieved, as the Honorable Deputy Governor of Central Bank also mentioned, that you need to see that who is financing, what is being financed, what are the instruments, and how these things can be changed. If you have listed companies that are not utilizing Islamic finance, it means that banking sector cannot be completely changed. And on the other hand, those banking or those companies, even majority of them, only if they change their financial financing products, they can be brought into the Sharia compliant capital market list. And this point of time, the performance of Pakistani stock market and other very positive indicators are something that can be used to attract not only the local masses to start investing. The problem is that we do not provide appropriate financial literacy at our basic school and basic college level. And our normal person is never aware of what are the investment financing and entrepreneurship opportunities that he need to look for. The very unfortunate part of our education system is that everybody who comes out starts looking for a job. This is where you cannot find the solution for the economic prosperity and economic development. And for that, we need to work together with the academia to develop the right set of financial literacy at all levels. I'm not talking about only the Islamic finance programs. I'm talking about integrating these things to the masses, because capital market will not work. Just if you go to see the number of capital market investors in Pakistan today as compared to the 250 million population, it is, honestly an alarming situation. Whatever we are planning will not work till the time we do not enable that financial literacy into our basic level of education. Obviously, the governments, the ministries of education of the provinces, the educational institutions, and on the other side, I would say ulama and scholars need to work together on that part to make sure that we make this change possible. In this change time, I have a word of caution as well. Whenever we talk outside of Pakistan, I take proud of being Pakistani, and I say, Alhamdulillah, our Islamic banking and finance practices, okay, they are not perfect. Nothing is perfect in this world. But always I take proud in saying that, okay, the practices in Islamic finance in Pakistan are way better as we compare to other places around the globe. And this is a reality not only I mention and I claim, but we have seen other experts from around the globe who agree on that. I have a word of caution here that, the conversion is necessary, but conversion should not happen at the price of compromising the quality. And this is something fundamental. This is the time we need to start thinking how we can take it to the real objectives of Sharia, how we can use these products and this approach for the real financial inclusion and the prosperity of the nation and prosperity of the economic prosperity. But here, the word of caution is we have to be very careful. And I would like to mention one thing that at times I mention, that, Nauzubillah, you cannot make fool of Allah subhanahu wa ta'ala by changing a bunch of papers. It's not about, okay, we had this contract and now we changed it to this contract alone. No, it is about the real essence. And I can assure you that the real essence of the Islamic finance product and the inherent strengths that they have, that is the real tool for economic prosperity and development. With that, I would like to just touch upon one last thing that I want to say, that there is a real need of coordinated efforts. Those coordinated efforts at this point of time are needed for the institutions like ours. Honorable Dr. Ishrat Hussain, ex-governor and ex-advisor to Prime Minister, was with us in the conference in Bahrain last month. One of the most important things he said, Umar, this is the time as AOFI, you need to work with Pakistan institutions. And I can assure you that our chairman has also mentioned the same desire, that we are willing to support all institutions in this journey towards this transformation, because this we believe as AOFI that is something for that can create a role model for other countries as well. And for that, we are willing to have our coordinated efforts, but at the same time, I would like to emphasize that the coordinated efforts between the Pakistani government institutions and regulators is also necessary. We were talking about the conversion of the Takaful sector. I can assure you, based on data available, the new retail Takaful majority is already Islamic. But the problem comes when we have like NICL, when we have state life. If you ask me, state life system can be changed to Islamic in days, because state life technically works on a cooperative model. You need to start changing the investments, and it can be but who is taking the responsibility? Who is taking it as a task in their hand? How these coordinated efforts are needed, how you ensure that the government departments and the government corporations is also start taking Islamic financial institution as their first choice of finance and investment. These are the issues where we need to find solution, working between the regulators, the industry associations, and the government authorities. And with that, I can assure you that we and other standard setting bodies, you will find them also with you, inshallah, in this journey. Thank you very much for providing me this opportunity.
Thank you very much, Brother Umar. And of course, very eloquently, you have touched upon numerous important points currently and for the future trajectory to be set right, especially in view of this new constitutional amendment that has set a deadline for the Islamization of the whole system. And if I, try and summarize for the sake of audience ease what Brother Umar and our Dr. Sami has alerted us to or tried to focus upon, is that if we want to make sure that we are able to achieve the potentials of Islamic capital market, which at least to my own end is the area where Islamic finance will have sustainable modern growth, ecosystem, and an ecosystem that is based on cooperation and collaborations is the way forward. And I think this is the bottom line, what is the outcome of our two learned speakers that have already been submitted. This now gives me the pleasure to involve Dr. Mehmet. Dr. Mehmet, your take on the whole theme of this session.
Thank you very much. First of all, Assalamu alaikum wa rahmatullah. Dear brothers and sisters, representatives of the esteemed institutions of Pakistan, representatives of the international institutions, I'm really honored to be here. And I thank the Securities Exchange Commission of Pakistan for the kind invitation. It's really a pleasure to be here among with you. I should say that I'm very impressed with the ambitious target of becoming completely riba-free in 2027. I think that's a great target to have, and congratulations to Pakistan representatives for establishing such a target and working towards it. It was also very nice to see the Expo we just visited. Very interesting to see the several initiatives of different players in the capital market and banking, players and actors. And there are several initiatives that's wonderful to see. I'm a representative of the stock exchange of Turkey, Borsa Istanbul. And I know that Turkey and Pakistan is working together at the Ministry of Finance level as well on the financial cooperation. And I'm aware of that. And there are consultations happening between the two countries. But as a representative of the stock exchange here, I'm happy to say that we are very open for collaboration with the relevant institutions, of course, particularly with the Pakistan Stock Exchange. And I had the pleasure of meeting the CEO, Mr. Farooq, and also the representatives of the Securities Exchange Commission are also very welcoming. So we are very, very happy to play our part and to collaborate with relevant institutions. And maybe I can say a few words about the current state of the capital markets. And by the way, I should also mention that a few very prominent speakers have already mentioned this point. Dr. Sami have mentioned, and Mr. Al-Khalifa also mentioned, that capital markets has a very important role to play when it comes to Islamic finance. Yes, banking has its place, but capital market has very, very important potential for realization. And exchanges play a very important role, of course, in that. And as Borsa Istanbul, I just want to say the instruments that we have. I just want to mention them. First of all, what we have in Borsa Istanbul as a, we call it participation finance. We don't call it Islamic finance. And the reason for that is the risk and reward sharing nature of Islamic finance. And referring to that, we call it participation finance because people need to participate to share the risk and rewards of Islamic finance. So what we do, first of all, we have an index, actually several indices, participation for participation shares. We have a BIST participation all index that covers the entire number of companies. We have about 550 companies listed at Borsa Istanbul, and about half of them are Sharia compliant. So this index lists all of them. We have a BIST participation 100, which refers to the top 100 Sharia compliant companies in our market. We have a BIST participation 50, BIST participation 30, we have a BIST participation dividend index, and we have a BIST participation sustainability index, which I have mentioned yesterday as well, that combines the Sharia compliant and sustainability indices. We also have a Turkish State Mint Gold Certificate, which is also another Sharia compliant product that is being traded in Borsa Istanbul. We have participation ETFs that are being traded. We have lease certificates that are being traded, SCUCs. We have BIST Gold denominated indices as well. And again, BIST SCUC indices we have. And we also have a committed transactions market. So the value of participation finance instruments surpassed 3.3 billion in the first half of 2023. The latest figures are probably much more. And it is projected to register cumulated aggregated ratio of over 10% over 2023-2024. So we are, a projected growth is calculated. And Turkey's participation finance ecosystem has reached $90 billion and is expected to grow exponentially in the coming years. So after sharing these figures, I also would like to mention that we have a very strong spot gold market, which is another important instrument for Sharia compliant investment. This spot gold market is 30 years old. It's the first spot gold market in the world. And we have been working on making the operations more efficient and adding new products. So over the last few years, we have also achieved a responsible supply chain system, which basically means taking the gold from the mine and all the way through the life cycle. You make sure it is sustainable and compliant with international standards. So we have this seal of approval from OECD for the gold products of the Turkish market. And we have quite strong trading in there. We also have some derivative products based on the gold market. So I will be very happy to talk more about these. And also, I should mention that as Borsa Istanbul, we are not only working on developing our Sharia compliant Islamic finance products, but we are also keen that these things happen in collaboration. And as mentioned with some of the previous speakers, we are all very supportive of cooperation in this, and we are trying to play our part by organizing annual meetings with the exchanges from all over the world. to all over the world, and particularly OIC region. So we bring together exchanges of OIC, which means Organization of Islamic Cooperation exchanges. We used to have these meetings physically in Istanbul every year. After the pandemic, we have been doing online meetings, but we will switch to physical meetings soon. So I will be very happy to see colleagues from Pakistan join us, which they are, of course. They are very keen and participating. And we can continue our discussions on how we can collectively improve our work on developing Islamic finance and particularly capital markets in that particular platform.
Thank you very much, Brother Dr. Mehmet. And I think, again, very fluently expressed and a very impressive list of the solutions that you have in your Islamic capital market, serving Sharia-compliant avenues for people to invest in through the Islamic capital market segment. And to my pleasant surprise, and I didn't know that before, I was told in this morning by the CEO of PSX that in Pakistan itself, 50% of the stocks listed are already Sharia compliant. So that itself is a very healthy indicator. So not only what Turkey is doing, but Pakistan is, and this is where what Brother Umar has mentioned, collaboration and cooperation jointly moving forward is going to be the added impetus for the modern trajectory of Islamic finance through capital markets. And this brings into discussion Dr. Abedin. We cannot complete this session's discussion and the outcomes without IFSB and what IFSB has to offer on this theme and the way forward. Dr. Abedin.
Bismillah ar-Rahman ar-Rahim, and thanks so much, moderator, and His Excellency and all dear participants. It's a great pleasure to be here with you this morning. Quickly, I'd like to start on the note that the IFSB expresses its profound gratitude to the SECP for this invite, and as a global standard-setting institutions that complement the activities of the Basel Committee on Banking Supervision, IOSCO for the capital markets, and the IAIS for the Islamic insurance. It offers us, a very great opportunity to, contribute to the discourse. The IFSB at the moment has about 188 members cutting across about 58 countries. It's important to bring this context so that we see that issues we are looking at is not jurisdictional specific, but rather it's something that, as Pakistan is looking at these issues, countries across the world are also looking at similar issues. And at some point, I would like to anchor later on the point of coordination, because there could be some operational synergy where, we see what is being done across jurisdictions and how we can bring that, together. Interestingly, the Islamic banking industry remains very dominant, accounting for about 70% of the 3.28 trillion worth of the Islamic financial services industry assets globally. But even more interestingly is that the Islamic capital market component accounts for about 1 trillion of that. 1 trillion compared to the global capital market worth of 255 trillion is just like a drop in the ocean. It means so much potential, but again, we would have to maybe hard speed and maybe put in more focus on how to ensuring that the benefits that the Islamic capital market offers are leveraged upon, and we take that as one of the way moving forward. The non-bank financial service industry, from the IFSB's point of view, requires more emphasis because the growth rate there is far higher than even the banking segment that accounts for a larger chunk of the Islamic financial service assets. The banking industry has recorded a compounded annual growth rate over a period of 2012 to 2023 of about 5%, whereas the non-bank financial institution sector had accounted for double that growth. It means the potential is very, very high there. So against that backdrop, why should we then focus on these non-bank financial institutions? Key reasons would include to promote financial stability, because we cannot look at one segment at the expense of the other. The more the banking industry had grown, it's important that these non-bank financial institutions, Islamic capital market, Islamic insurance, also grow. This would help to facilitate the diversification of investment as well as risk management, but also will narrow the gap between the supply and the demand for long-term financing. the banking industry, especially in jurisdictions that are very banking dominant, will not be able to meet the infrastructure need, for instance, because the kind of financing required for that is long-term, and it's very much suitable for the Islamic capital market to support that. Then this also is another important point, because the Islamic capital market supports other sectors. I think Mr. Ansari mentioned earlier, even when sukuk are issued, it's also one of the means through which Islamic banks manage their liquidity. So this is very important. And of course, some jurisdictions like Pakistan, gladdening to know that you are aspiring, and inshallah, may Allah grant you ease and success in that particular drive, to becoming full-fledged, Sharia compliant financial system. So this means that the opportunity that you have, because your banking system is already around 20% systemic significance, then more emphasis will be on the capital market. But again, gaps remain. In the briefing, I was told that I should focus on regulation. But I want to say regulation is just one of the key concerns, one of the key gaps. There are many other gaps, which would include product development, innovation, and standardization, issues that relate to the role of market makers, issues that relate to absence of benchmark yield, issues that relate to market liquidity and volatility and high cost. Of course, we have talked about high cost of issuance, of sukuk, and so on and so forth. And I think yesterday, Dr. Sami was mentioning about the efforts in terms of sukuk enhancement and so on and so forth. Issues of taxation, tools of liquidity management, and so on and so forth. So where we look at all this, the preconditions that are necessary, therefore, to ensuring that the Islamic capital market plays its key role would include not looking at it only as a sector, but looking at the pre-existing macroeconomic conditions, because it exists within an ecosystem. So the financial condition of the economy itself would be very important. Then there will be the robust institutional framework. I think it's gladdening to know that streams of regulations have been issued in the Pakistani context over the years, and these are very, very helpful to know. Legal protection of investors will be very helpful, and of course, international financial openness to attracting not only local investors, but to bring in foreign investors. So as we move forward, regulations after the global financial crisis had been very many, and the IFSB also had played a very crucial role in that instance. But there are now emerging challenges also, which as the Islamic capital market would grow in Pakistan, this also would have to be put into consideration. So one would include cyber resilience in the capital market, financial technology challenges, fintech challenges, climate-related challenges, and so on and so forth. But on a regulatory point of view, I'd like to emphasize, as the market expands, expectations from regulators would also expand, but there would also be the need to have the requisite resource to supporting that, not only in terms of expertise that are required, how do you leverage technology from a subtech point of view, and how do you ensure that there is the buy-in. So by and large, I'd like to conclude by saying that this should be viewed from an ecosystem point of view. The key players will not only include the regulators, there will be the investors, there will be the issuers, there will be, of course, the institutions, there will be the intermediaries, and of course, the individuals that are also going to invest. So it's a kind of holistic view that should be adopted in this particular instance. IFSB had issued a standard which we call Guiding Principles on Deepening the Islamic Capital Market, IFSB 13. For the sake of time, I would rather like to refer you to look at those. There are a number of recommendations contained therein on how the Islamic capital market can be deepened across jurisdictions, and I think those are very much applicable to the case of Pakistan also. Finally, please, moderator, just 20 seconds, just to end this, is the fact that at the IFSB, we are also, as part of our strategic direction moving forward, looking at a few things which I think are very important, and would like to work with the Securities and Exchange Commission of Pakistan, and of course State Bank of Pakistan in this particular regard. One of those is promoting sound development, transparent and resilient non-bank financial sector, strengthening financial safety nets and crisis management frameworks, and of course, we are reviewing our existing standards to see latest developments that have happened and how we attune those to peculiarities of jurisdictions, for instance, like Pakistan. And finally, we are also assessing the impact of emerging issues. We are very much concentrating on issues of sustainability, not only on the taxonomy part, but also on the part of disclosure to mitigate incidences of greenwashing and so on and so forth, and to ensure that the Islamic financial service industry plays its own crucial part in this latest development. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Thank you very much, Dr. Abedin, and it was a very comprehensive articulation of the core issues that you have already mentioned, hit upon, raised, and what IFSB is doing. Folks, I mean, it's such a heavy dose panel that we can go on and on. As a matter of fact, the whole conference can be led by this panel, Sam, but I've been, twice reminded that we are pressed for time. But guess what? Let me squeeze a little more juice out of the four very important and sweet lemons that I have on the stage. I'm going to go 1 minute each. We are crisply giving way forward to SECP and Pakistan through the dimensions that we are discussing. To Dr. Sami. Now, all of us predominantly agree that an ecosystem approach is the way forward to leverage maximum benefits of these segments of Islamic finance, i.e. capital market and related items. And you're a huge proponent of entrepreneurial support, entrepreneurial ecosystem, youth on top of it. And yesterday I came to know that, given the size of population of Pakistan, the companies registered in the country are 50% lesser than what it should be. So for you, sir, the way forward for SECP in Pakistan, so you, sir, the way forward for SECP in Pakistan in your spectrum of VC, NBFIs, and how these can be promoted and supported. And to Brother Umar and Brother Abidin, what role can IOFI and IFSB play to address the standardization and harmonization challenges simultaneously when this trajectory is set to course? And of course, to countries like Turkey, how best we can learn from best practices of each another and your way forward for SCCP moving on. Dr. Sami.
Let me share with you preliminary numbers, okay? How much venture capital in different countries relative to the GDP, because you cannot compare apples with oranges. So you have to, first of all, compare countries that are close in terms of GDP, and then compare the ratio. And this is the available data from Statista and other. So for example, Malaysia has GDP of $400 billion. The venture capital spending in 2024 estimated is 429 million. This is about 0.1%. Okay. Philippines, GDP is 400 billion also. Venture capital spending 560 million, which is about 0.14%. Nigeria, GDP is 360 billion something. The venture capital investments, 543 million, about 0.149. Turkey, 1.3 trillion GDP. So that makes the comparison relatively, but the spending is 300 million venture capital. So that makes the ratio of venture capital to GDP 0.024% for Turkey. Now comes Pakistan. GDP is about 376 billion. Venture capital, 14 million. This is 0.004%. Now, from my personal experience, I would say out of 10 Pakistanis, 9 are entrepreneurs. You, mashallah, you meet Pakistanis everywhere. In the US, in the UK, Europe, the Gulf, Middle East, you name it. I cannot find a Pakistani who is not entrepreneurial. That means we have the potential. We have the potential. We just need to capitalize on that potential. I don't know what's wrong with this. We need to capitalize on the potential. and institutionalize the process. So venture capital is at the end. First, as I mentioned, we need education, learning from the universities or other. Okay, maybe this one is better, sorry. So the venture capital, I think I have to repeat some of the numbers. The venture capital spending in Pakistan relative to the GDP is the lowest as far as we can tell. Extremely low, despite the fact that it is evident from all kind of sources that entrepreneurial spirit in Pakistan is extremely high. So there is no shortage of potential entrepreneurs in this country. So the issue is not about potential. While other countries, without mentioning, you will find people are humble, straightforward, follow the rules. I mean, different countries have different entrepreneurs. They don't like the rules. They like to break the rules, right? So you just need to provide them that proper environment, that you guide the spirit toward building something useful, productive, and constructive to the community. So just to be practical, I would suggest, now I am not very well familiar with all the organizations in Pakistan. I understand there is a small and medium authority, small and medium business authority in Pakistan. That's very good, but we need a complete ecosystem. So someone has to take the lead. Since now we are a guest for the Securities and Exchange Commission, I would suggest that the Securities and Exchange Commission take the lead and build a plan for this full ecosystem, from education all the way to mergers, because how would venture capital exit? Either merger and acquisition or capital market. And in the US, they created NASDAQ especially for those small companies. And now NASDAQ took over New York Stock Exchange, okay? So I'm sure the leadership of the Securities and Exchange Commission is more than capable of putting the plan into action. Thank you very much.
Thank you very much. And an extremely policy and way forward prescription by none other than Dr. Sami. You lived up to your reputation, Dr. Sami. Thank you very much. May Allah bless you. Brother Umar, I mean, it's a third reminder. I know we can discuss lengths and lengths on this important issue. Brother Umar.
Thank you very much. First thing, I repeat, financial literacy at all levels. That is, without that, you cannot get your markets, financial markets, capital market done, number one. Number two, technology is changing the face how capital markets will work. You need to start working now to make it properly available on time. Number three, enabling regulations. Just to emphasize, enabling regulation does not mean that these are very flexible and easy to go. No, at times enabling regulations can still be a bit strict because you have to safeguard the interest of the stakeholders. So when I say enabling regulation does not mean that you compromise on Sharia compliance or you compromise on the stakeholder interest. But when I say is that the products should be available in a way that appropriate regulatory regime is available. Thank you very much.
Thank you very much, Brother Umar, for being so crisp and so to the point. Dr. Abedin.
All right, quickly, I think there is no need repeating all that has been said. I would just like to put it in a particular order. Ecosystem is the way to go, but the first, in our opinion, would be that as much as possible, you have achieved a national kind of strategy already, that you have a national view of where you are headed. The next thing would be getting all the critical stakeholders to key into this. Investors, institutions, individuals, maybe involving a lot of incentives or awareness, as the case may be. Only then, can leverage on technology to broaden the reach and the depth, and subsequently regulation will come up. So regulation, therefore, would be in form of adapting to the situation in a way that localizes the situation, not only imposing, regulations because it has worked in a particular jurisdiction, but, aligning with the local reality of Pakistan so that, you can have it in a very organic form. And of course, finally, would be to ensuring that, as much as possible, there is the opportunity for refinement. The IFSB will be more than willing to work. SCCP is already our member. We have a stream of technical assistance, capacity building support, and so on and so forth. We think this will be very critical in this journey, and we are more than willing to partner with you in this successful journey, inshallah. Assalamu alaikum.
Walaikum salam, and thank you very much for offering and reconfirming the support to SCCP from IFSB. Dr. Mehmet, your last parting views.
Yes, so as a regulator, so for we are talking about capital markets, and we have the regulator and we have the operator. The regulator is the SCCP and the operator is the Pakistan Stock Exchange, and of course the other players of that ecosystem, the brokerage houses, the clearing and settlements institution, the central securities depository, and all these players would need to, of course, work together. And what is the main role of the regulator is, of course, to make the regulation, right? To make the regulation to enable the development of the market. And the regulators are globally facing challenges. Maybe this is not a very recent phenomenon. This has always been the case. But now we are seeing significant developments globally these days with the artificial intelligence coming up, with the digitalization, the crypto trading all over the world are challenging the regulators. The global regulatory institution, ISCO, is, publishing report after report on how to, come up with better regulations around these upcoming developments globally. And regulators are facing the challenge of how do you meet that? I mean, there are these developments. You don't want to, stop them from developing by harsh regulations. You want to allow them developing, but you also need to regulate that. So that will be a challenge for SCCP, just like for the rest of the regulators around the globe. But also, particularly with regards to the Islamic finance products, developing regulations for new and innovative products like, for example, green skooks and other such innovative products will be a challenge to face. But most importantly, it all comes down to, in my view, the liquidity in the market. So, and steps need to be taken, and we have been discussing a lot about this over the course of this last 2 days. How do you improve the liquidity in the market, and how the regulators can help with that? I guess financial literacy, constantly working with the companies and constantly improving the infrastructure and bringing better products to the investors, becoming more efficient in the operations, and working internationally as you are very efficiently showing and doing today, I think is the way to go. So I just would like to congratulate Securities and Exchange Commission for their steps.
Thank you very much, Dr. Ahmed, for very important policy prescriptions. Thank you to all the very worthy panelists. I think we benefited, I personally benefited, and I believe the whole audience over here who are even online and watching us globally must have benefited. Ladies and gentlemen, it was a very important panel trying to crack the code on telling Pakistan and SCCP how to navigate the future of Islamic capital markets. And the following 4 points, among other points, the following 4 core points are the outcome of the session, and I believe we have a consensus over here. Navigating the future of Islamic capital markets through SCCP and for Pakistan, we have to follow an ecosystem-driven approach. An ecosystem-driven approach that is essentially geared up to focus and support NBFIs, the non-banking financial institutions. Venture capital should be introduced, and entrepreneurs classically tapping the youth of Pakistan which, as Dr. Sami has pitched upon, that 90% of the folks in Pakistan have this entrepreneurial elements in them. Collaboration, cooperation is going to be the added lubricant that will help achieve and actualize what is being envisaged and policy prescribed for SECP and Pakistan moving forward. And of course, last but not the least is the financial literacy. Nothing can be done with the right set of capacity building and human capital taking the lead in taking the agenda forward and living the agenda to its full maximum potential. These are those 4 points, and already IFSB and IOFI has reiterated their support that they are willing to go hand in hand with SECP, even SBP, and all the stakeholders in Pakistan to ensure that this new readoption of Islamization of economy is not only new in its approach, new in its mechanics, but also new in its momentum and vision and aim. So thank you very much, dear panelists. It was a personal honor and an honor for all of us. Ladies and gentlemen, let's give a huge round of applause to the worthy panelists and what they have produced.
Thank you so very much, Brother Mughis and the rest of the August panel. If I may request Mr. Zishanur Rahman Khatak, Commissioner SECP, to please come on a stage to present souvenirs to the esteemed panelists. If I may request for a group photograph, and then subsequently we'll present the souvenirs. Okay. If I may request Khatak Sahab to present the souvenir to Dr. Samia Salem, Acting Director General, Islamic Development Bank Institute. Dr. Samia Salem. Please give them a big round of applause. Mr. Umar Mustafa Ansari, Secretary General, Accounting and Auditing Organization for Islamic Financial Institution. Dr. Abedin Adiyami Adewale, Acting Assistant Secretary General, Standard Implementation, IFSB. Dr. Mehmet A. Dogmas, Director, International Relations, Borsa Istanbul. Thank you so very much, gentlemen. Thank you, that's it. Now, we'll be having a keynote address. That's it, thank you, gentlemen. Dr. Mughis, I'm sorry, I forgot the name. Dr. Mughis, please. Sincere apologies, that wasn't part of the script writer. Okay, Ji, thank you so very much, gentlemen. Thank you. No, it was not on the script. Oh, sorry. Okay, Ji, we'll be having a keynote address, and I really hope that you have enjoyed the panel discussion. For this session, I am honored to invite His Excellency Dr. Imamotimi Agama, who is the Director General, Securities Commission, Nigeria, to share insights from Nigeria's experience. Please welcome Dr. Imamoti Agama.
Assalamu alaikum. It's indeed my pleasure to be here, but particularly I want to thank the chairman of the Securities and Exchange Commission, Pakistan, for finding me worthy to be invited to this very august occasion. Particularly, even though in absentia, I want to thank the Chairman Board of Trustees of IOFI, Sheikh El Ibrahim Khalifa Al Khalifa. It's been a wonderful time, and this last 48 hours, so to speak, to mingle and associate with this very eminent group of persons, and especially to the executives of the Securities and Exchange Commission, Pakistan. It has been a very, very heartwarming welcome and a high level of hospitality. As Nigerians, we are proud of our nation, we are proud of our population, and we are proud of our culture. One of that, this culture, is actually Islamic finance. For those that do not know, Nigeria is a country in West Africa, the most populous black nation of this world, where in every 10 black people in this world, we have 4 Nigerians. And we are very proud of our heritage. But particularly still, Nigeria is a country that has a secular nature, in the sense that we have almost 50% Muslims and 50% Christians. But what is important and critical for us is our ability to live together in peace, harmony, and happiness. And in doing this, we have embraced every culture. One particular culture that we've embraced in Nigeria is the Islamic capital market. There we have used the Islamic capital market to bring development to our nation. I thought I would have had an opportunity to do a slide presentation, but either way, I'm available to do a prose discussion. What is the Islamic capital market, and how has it become something of great importance to us as a nation for infrastructure development, and to our people as a means of investment? Distinguished organizers, esteemed scholars, academics, regulators, industry leaders, and honored participants, may peace be upon you, and warm greetings to all. It is a privilege to address this August gathering of the second International Capital Market Conference, taking place here in the ancient city of Karachi, Pakistan. And I'm particularly happy to be here, because if there's anything you will know, almost all of the demographics of Pakistan is exactly what it is in Nigeria. The only difference between Nigeria and Pakistan, perhaps, is the fact that here you have in Nigeria you have more colored people, and here you have more white people. But all the same, I can tell you without a doubt that in terms of the structure and the demography of both nations, they are like Siamese twins. And so a lot of things happen, conjointedly between the two nations. I bring you warm greetings from the Securities and Exchange Commission of Nigeria, a nation like Pakistan, leveraging the Islamic capital market to catalyze sustainable development. I stand here as both a regulator and a partner, keen to share Nigeria's experience in harnessing the potentials of the Islamic capital market for economic transformation. Before I proceed, let me commend the efforts of the Accounting and Auditing Organization for Islamic Financial Institutions and the Islamic Development Bank Institute, where my very dear friend, Dr. Sami, is yet seated with me, and we've always been riding together since I came for this conference. It is indeed a great pleasure to also recognize the Secretary General of our OFI, and indeed the Chairman Board of Trustees who has just left here. So for me, why is this very essential and important? One of the first programs that I attended in Islamic finance was organized by AOFI. So, as it is, I can count myself as being AOFI certified long before now and long before this date, knowing that Providence will bring me here today to address this August forum that speaks to Islamic capital market. Assembling the diverse group of policymakers, market operators, scholars, and other stakeholders to deliberate on issues that enhance the development of the Islamic capital market globally truly exemplifies our shared commitment to advancing ethical finance as another alternative to assessing financial services. The topic for the panel session is particularly relevant to today's global economic landscape as the world seeks ethical and inclusive financial solutions. Mobilizing resources, the ICML stands out as a resilient and innovative tool for this particular action. I will share Nigeria's journey, highlighting our achievements, challenges, and aspirations. But before then, let us look at the global Islamic finance industry as it currently stands. Do I really have the strength to do so when I have scholars of repute that already know about what the global trend is? However, I will give a snippet. Globally, the Islamic finance industry continues to grow, with total assets reaching 3.38 trillion in 2023, according to the figures from the Islamic Financial Services Industry Stability Report 2024, as published by the Islamic Financial Services Board, ISB, where you have the Acting Secretary General in charge of implementation, who is proudly a Nigerian. So, Islamic capital market products, including Sukuk, Islamic mutual funds, and Sharia-compliant equities, account for approximately 30% of these assets. This growth is driven by rising demand for Sharia-compliant instruments in core markets such as Southeast Asia and the Gulf Cooperation Council region, as well as in emerging Islamic finance markets like Africa and Europe. The Islamic Cooperation for the Development of the Private Sector, ICD, in its 2023 Islamic Finance Development Indicator Report, projected the industry to reach $7.5 trillion in total global assets by the year 2028. It is interesting to note that Islamic finance in sub-Saharan Africa is growing and growing at a lightning speed. In highlighting in the report of both the ISV and the ICD last year, 2023, Kenya launched its first Sukuk, the Lizin Sukuk, while Tanzania introduced Sukuk regulations, right, in August of the same year. Egypt amended its laws to enable multiple Sukuk issuances and subsequently issued its first sovereign Sukuk worth $1.5 billion. Although the region holds just 0.7% of global Islamic finance assets, the rising interest in Sukuk reflects the potential for economic growth. In the same vein, the ICD in its 2024 report recognized Nigeria as the 14th of the 15th most growing economies in Islamic finance in the world. This acknowledgement reflects our progress in expanding Sharia-compliant products and fostering financial inclusion. Additionally, Fitch Ratings, in its review of the country's initiatives in 2023, projects that Nigeria's Islamic finance industry will reach $3.8 billion in assets by the end of 2024. Out of this projected figure, Sukuk markets took the lion's share of 59.3%, while the non-interest Islamic funds banking sector accounts for 39.8%. The remaining 0.9% is shared among Takaful and Islamic fund segments of the industry. This further underscores the sector's potential for growth. The success of the Islamic capital market in Nigeria is deeply rooted in its strategic focus on infrastructure financing, financial inclusion, and sustainability, a theme which is part of this very important conference. Our engagement with the ICM dates back to 2004, when the SEC joined the Islamic Finance Task Force of the International Organization of Securities Commission. The commitment was followed by the issuance of Islamic Fund and Sukuk rules in 2010 by the SEC and in 2013, respectively, and later solidified the Non-Interest Capital Market Master Plan 2015 to 2025, which outlines a 10-year roadmap for expanding markets depth and delivery. This, for us, is very critical. It shows our intentionality in building the Islamic capital market from root to the highest point. And we have been able to adopt this as in 2015 as part of the broader Nigerian Capital Market Master Plan. The non-interest capital market master plan has been central to the development of the Islamic capital market segment in Nigeria. The document sets out a vision for the Islamic capital market, and otherwise known as the non-interest capital market master plan in Nigeria, to contribute 25% of total market capitalization by the year 2025. With Sukuk accounting for 15%, the master plan was further reviewed in 2021 to provide a renewed focus on deepening the Islamic capital market through targeting 50 listings of Sharia-compliant products with market capitalization of at least $5 trillion, $11 billion by the year 2025, which is just at the corner. The performance of the Nigerian Islamic Capital Market Master Plan has been remarkable. So of the 15 initiatives outlined in the roadmap, 9 had been fully implemented as of the year 2022, representing 70% success rate. Key achievements include improved public awareness, increased retail participation in Sukuk, and introduction of the non-interest pension fund through collaboration with the National Pension Commission. Another key achievement also was the release of guidelines for taxation of non-interest transactions in collaboration with the tax authority. This solved the challenge of double taxation hindering the improvement of the Sukuk products. A key pillar responsible for growth of the ICM in Nigeria is the issuance of Sukuk since 2017. The federal government of Nigeria has issued 6 sovereign Sukuk worth 1.1 trillion. That comes to $657.6 million to finance 124 federal projects covering over 5,820 kilometers across the 6 geopolitical zones of our country, Nigeria. You will agree with me that there is no better person or no better institution that has facilitated the growth of the Sukuk product other than the federal government of Nigeria. And we are so proud that every part of Nigeria that you go to, you'll find something inscribed that this particular project was funded by a Sukuk issuance. And for us in Nigeria, it has brought development, it has increased our assets, and of course, it has provided inclusion to our Nigerian capital market. Subnational and corporate issuances are also growing in Nigeria. Notable examples include Osun and Lagos States, Family Homes Limited, Taj Bank PLC, along with private Sukuk issuances by 3 other subnationals. Because the federal government has provided a benchmark, every other organization is queuing at the back of the federal government. I'm very proud to say, even as I sit here this morning, I opened the newspapers in Nigeria and I discovered that a new Sukuk product has just been launched yesterday by one of the asset managers in Nigeria. It only tells you that in Nigeria, the taste and the desire to have more of these products is beginning to grow and beginning to take a wildfire range even in our country. So beyond all of this, beyond Sukuk, the ICM segment in Nigeria offers diverse investment opportunities. From one registered fund in 2008, the segment currently boasts of 14 registered halal funds with a net asset value exceeding 105 billion naira as of November 2024. The NGS Lotus Halal Islamic tracks 11 Sharia-compliant equities, while Nigeria's first Islamic real estate investment trust, Chapel Enrit, highlights the potential of real estate investments in Nigeria. For us in Nigeria, there is no barrier. Whatever can be done properly will be done properly. As long as it is done ethically, we will all embrace it. Because for us, there is nothing better than being ethical and being holy, because that is the best way to go. The prospects for Nigeria's Islamic finance industry are underpinned by key growth drivers, both global and domestic. Globally, demographic trends, economic diversification efforts in oil-dependent economies, and regulatory support have spurred demand for Sharia-compliant products. Locally, Nigeria's large Muslim population, government-backed Sukuk initiatives, and growing investor awareness are driving market expansion. Emerging innovations in fintech also present further opportunities for market development. In that regard, the SEC registered first robo-advisory firm in the Nigerian capital market in 2021. The robo-advisory is focused on Sharia-compliant investments. However, the growth of the ICM segment within a decade and a half is not without challenges. These include limited public awareness of Islamic finance principles, paucity of tradable instruments, and regulatory alignment across institutions. Capacity building efforts, particularly in Sharia governance compliance, remain critical to sustaining growth. These, of course, are critical areas the SEC is currently implementing strategies to address with relevant stakeholders, particularly in the public and private sector, providing targeted and effective solutions. Of particular interest, though, is our ongoing effort to engage relevant stakeholders in the mortgage sector to develop Sharia-compliant housing finance solutions. This, I'm sure, we will learn a lot from Pakistan. This will create needed impetus for developing Sharia-compliant, asset-backed instruments to deepen our capital market. I see that I've taken so much time, and the moderator is waiting by me, so probably cut off to say, at this junction, I would like to commend the support of the Accounting and Auditing Organization for Islamic Financial Institutions, AOFI, in the area of capacity building, and the IFB, and SEC Nigeria remains open to more collaborations with relevant stakeholders as we strive to create an enabling environment for a robust global Islamic capital market. Finally, I wish to express my profound gratitude to the organizers of this conference and the opportunity extended to the SEC Nigeria to participate in this important dialogue while making a difference. I want to thank you for your attention and look forward to more engaging sessions. Assalamu alaikum.
Thank you so very much, Dr. Agama, for the wonderful case presentation and taking the cue, because we are unfortunately a bit short of time. So in order to present a souvenir to Dr. Agama, if I may request SECP's partner organizer, Dr. Samia Solem, to represent ISDV Institute, to present him with the souvenir. Dr. Sami. Please maybe come to center. Dr. Sami. Please. Thank you so very much, gentlemen. Thank you. Now, we'll be having another important panel discussion, that is exploring potential of Islamic capital markets, opportunities and challenges in financial resource mobilization. For this, I would like to invite on stage the moderator of the session, Mr. Ahmed Ali Siddiqui, Director, Center for Excellence in Islamic Finance and IBA. Brother Ahmed Ali Siddiqui. Okay. Then, if I may request Mr. Abdurrahman Vadaich, Commissioner, Securities Market Division, SECP, to please come on stage. Mr. Farrukh H. Sabzwari, Chief Executive Officer, Pakistan Stock Exchange. Mr. Seichiong Lim, Chief Executive Officer, Saudi Venture Capital Investment Company. And our dear brother from Iran, Dr. Majid Poyan Meher. Dr. Majid. Please. Brother Ahmed, the stage is all yours, please. Yes, Dr. Majid is over there.
Bismillah ar-Rahman ar-Rahim. Alhamdulillahi Rabbil Alameen. As-salatu was-salamu ala Rasulihil Kareem. And I'd like to welcome all the distinguished panel members today on this very important topic of how to enhance the potential of Islamic capital market, opportunities and challenges in financial resource mobilization. And we are very fortunate to have four experts of the area. Mr. Abdurrahman Wadaich is the Commissioner of the Securities and Exchange Commission at SECP, and he has a vast experience in this area of capital market. He has also served as the Director General Debt and Debt Management Office, Government of Pakistan, and he has the credit to re-initiate the Sukuk program, Pakistan Sukuk program, that was at a very slow pace, and in his tenure, the Sukuk program took new heights, and today we have more than 5,000 billion rupees of Sukuk in the Pakistani market. We also have Mr. Farooq Sabzwari. Sabzwari Saab needs no introduction, mashallah. He is now the CEO of Pakistan Stock Exchange. He has previously served as the Chairman Securities Exchange Commission of Pakistan, an expert in his field, and we hope that under his leadership, the Pakistan Stock Exchange will take new heights, inshallah. Now, then we have Mr. Se Cheong Lim, another our guest from the South, who heads the Saudi Venture Capital Investment Company, a fully Sharia compliant firm working under the license of Capital Market Authority of Saudi Arab. He has a rich background of Islamic finance. He has worked at various prestigious organizations, including Lota Global Capital, Numara Asset Management Malaysia, Noor Islamic Bank, and Al Hilal. So, Mr. Lim, welcome to our panel. And also we have Dr. Majid. Again, he's an expert of Islamic finance. He heads the Islamic Finance Office at the Securities and Exchange Organization of Iran with a master's degree in Islamic finance and currently pursuing his PhD. He has an extensive experience, and he has contributed a lot for Sharia compliance and Islamic finance growth in Iran. So with this very powerful panel, Islamic capital markets in Pakistan, if we broke it into three broader terms, we have the stock market, the Sharia compliant stocks, which now constitute over 51% of the total scripts listed in the Pakistan stock market, with a market value of over 5,000 billion rupees. And in terms of dollars, you can say it's closely 20 billion US dollars, the Sharia compliant stocks in Pakistan market. Second, we have the Sukuk market. Again, the Sukuk market, just this year, the year which is concluding, 2024, we have witnessed issuance of over close to 2 trillion rupees of Sukuk in the local market. Just this month, we have witnessed an issuance of over 320 billion rupees of 7 Sukuk in just one day. So Pakistan has emerged as a significant player in the Sukuk market, and the current stock of the Sharia compliant Sukuk in Pakistan market is approximately close to 18 billion US dollars. Also, the Sharia compliant mutual funds have contributed a lot, and the size of the Sharia compliant mutual fund market is now touching 1 trillion rupees in the Pakistani market. And we have seen significant interest in the Sharia compliant mutual funds, especially with the issuance of Sukuk. And we expect new products and new innovation in this area. So with this, I would like to invite Brother Abdurrahman Wadaich for his opening remark, and you can also share your slides here, please.
Thank you very much, Mr. Ali. I have a short presentation also, if it can be displayed. What I basically want to share with the audience is that the Sukuk market has two broad segments. The sovereign Sukuk market, where the federal government is the issuer, and the corporate Sukuk market, where the Sukuks are issued by different businesses to finance their activities. And in Pakistan, we have been struggling to develop the corporate Sukuk market, as there were very few issuers who wanted to resort to the capital markets to raise funding. And the investor confidence was also not very high when it came to investing in corporate Sukuks. And there was a growing realization that probably a major step to develop the Sukuk market could be that the federal government takes the initiative and starts raising its debt on the capital markets by utilizing the services of capital market institutions. Perhaps that would help democratize the Sukuk market. It would help to enhance the investor base, encourage a variety of investors who already invest in through the securities exchanges, mostly in equity securities. They will start taking a serious look at Sukuks as important diversifiers for their investment portfolios. And if the government could make it easy for a variety of investors, both local and foreign, to start investing in government Sukuks through the securities exchanges, that could perhaps set the stage for more issuance of Sukuks by the corporate sector and more inclination by the investors to invest in these instruments. So a major breakthrough happened last year when in December 2023, for the first time, the federal government of Pakistan decided to appoint the capital market institutions, including the stock exchange and the clearing company and the central depository company as its agents to raise debt from the market. So the first Sukuk auction of sovereign government bonds was held on the Pakistan Stock Exchange in December, and now we have had multiple auctions, and the government has raised in the range of 2 trillion rupees through issuance of Sukuks through these capital market institutions. But this decision came after many years of deliberations and delays, and I have to make a few acknowledgements. Because this was a big decision. Traditionally, the government had only used the central bank's counter for its domestic borrowings, and there was a reluctance to resort to the stock exchange and the related capital market institutions for this purpose. But then Dr. Shamshad came as the interim finance minister last year. She had a short tenure of 5 to 6 months at most, but she had the clarity that this was a way to open up the financial markets of Pakistan and democratize the Sukuk market and widen the investor base and hopefully create more competition amongst the investors, lower the borrowing costs, and there were many other benefits. There would be more transparency in the issuance and in the payment and settlement process. Foreign investors would be able to take a closer look by going to the stock exchange's website and looking at the price volume data of sovereign Sukuks, just like they do for the equity securities. So she was instrumental in changing the policy, and now the finance ministry has the option to use any institution as its agent for raising of domestic debt and for the related functions, which of course include the clearing and payments and the custody and transfer of these securities. The government, the finance ministry still controls the process. It still plays the strategic role of planning the overall issuance, announcing the auction calendars. The auctions on the securities exchange take place every 2 weeks. And the actual issuance so far, as I said, has been in the range of 2 trillion rupees, which is around 30% of the total outstanding Sukuks at the moment, and around 4 to 5% of the total government securities which are outstanding. So within a year, the numbers have begun to look decent, and although this market is still small compared to the older market for issuance of government securities, but it is all set to grow at a very fast pace now. The government is now issuing a variety of Sukuks on the exchange. The tenors come in 1, 3, 5, and 10 years. The type of profit is variable as well as fixed profit rates. The minimum denomination for a single sukuk is just 5,000 PKR. So even small investors can submit their bids and also trade in the secondary market, the same way that they trade equity securities. The expected benefits of this initiative are not very difficult to see. One, of course, major benefit is to create more competition. Let more investors see the opportunity and compete for investments in sukuks. Another major objective is, of course, more transparency. The confidentiality of the bidding process, the margin system, the way payments are received and the transactions are settled. Price discovery is, of course, expected to improve with greater competition, higher transparency. The government's borrowing rates are expected to come down with time. There is an opportunity for the investors to diversify their portfolios. Until recently, the investors in the securities exchange would invest only in equity securities. But now this new opportunity of being able to invest in low-risk sukuks has enabled the investors to diversify their portfolios. In times when the equity securities are not performing that well, sukuks can offer a very attractive avenue to earn stable returns by making low-risk investments. And there is the opportunity for the government to also diversify its borrowing sources by utilizing platforms like that of the Securities and Exchange. The government is also opening up new avenues for borrowing. And one important aspect, the capital market institutions in Pakistan take a lot of pride in the way the taxes are collected on the trading in these sukuks in the secondary market and from the holders of sukuk who receive profit payments. So the taxation system for at-source collection of taxes on the profits earned and the capital gains earned on the trading of sukuks is very robust and very transparent and reliable. So the government is already benefiting in terms of better tax revenues also. The two major steps that were needed were the federal government had to make its rules more flexible for raising of domestic debt. The federal government needed to allow the Ministry of Finance to appoint any institution for raising of domestic debt and for handling the incidental functions of registration and issuance and payment. And the other important part was, of course, that the institutions, the capital market institutions, should have the relevant regulations and processes for smooth functioning of this market. So the exchange and the clearing company and the depository had to come up with regulations to make sure that their systems are integrated and the issuance and secondary market trading can take place smoothly. Now, there are many other things that are being done and that need to be done to facilitate more investment in sukuks through the capital markets. A competitive commission structure is needed. The margin requirements need to be very reasonable because these are very low-risk securities. They have a very high demand, so the margins are expected to be much lower. The revaluation mechanism so that the investors can mark to market their portfolios has to be very transparent and robust. The settlement processes, especially for the institutional investors, have to be very agile. The banks and many of the other institutional investors want to settle their trades on the same day, sometimes on real-time basis. So the capital market institutions are upgrading their systems for settlements on the same day and, of course, over time on real-time basis as well. The eligibility of these sukuks for open market operations conducted by the central bank is a very important step. And I must acknowledge the patronage from the current finance minister. He has been instrumental in convincing the central bank that the open market operations should be allowed by accepting these sukuks as well as a collateral for the repo and reverse repo transactions that are conducted in that system. So we expect that very soon those regulations will be in place, and this facility will also become available for these sukuks. The banks and certain other institutional investors need special trading rights where, in case of proprietary trading, they may not require brokers to place their orders. That facility is also being provided to a handful of institutions which have the expertise and the resources to undertake these responsibilities. And finally, a separate trading terminal is under consideration for wholesale investors who want to trade in large-sized lots. So there are many other related initiatives and policies which are either in the offing. Some of them have been completed, and some of them hopefully will be in place within a short period of time. I would not dwell too much on the corporate sukuk market, because our hope is that as investors become more comfortable with the sovereign sukuks being issued and traded on organized exchanges, hopefully more corporates will be encouraged to raise their financing through sukuks and utilize the capital market institutions for this purpose. SECP has been trying to simplify the process for issuance of corporate sukuks, but the reality is that still this market has not gained a lot of traction. And as I said, we hope that as the market for the sovereign sukuk develops and democratizes and more retail investors participate, hopefully the corporate sukuk market will also pick up. And the way forward, of course, is that once the market becomes familiar with the sovereign sukuks, we would expect and try to persuade the large-sized corporations in the country to utilize the capital markets for raising their financing. Our strategy, of course, is to persuade the large corporations which have higher credit ratings to raise more financing through sukuks. We simplify the approval process. We do it quickly. The process should be simple. We should introduce the concept of shelf registration, where a corporate can register once and the sukuk issue can be issued in tranches. And finally, the costs of listing and trading and the incidental charges for ratings and audits should be as low as possible. So thank you very much. This was a brief introduction of what has been happening, and we are really counting on the sovereign sukuk market to grow at a fast pace. And we would request our foreign delegates and friends to take a close look at this reform that has taken place in Pakistan. As per our knowledge, there are very few countries which utilize the organized exchanges for raising and trading of sovereign domestic debt in their jurisdiction. So once you go back, we would encourage you to try and convince your respective governments and ministries of finance to take a close look at this initiative and hopefully try to raise more debt through the capital markets in your countries. Thank you.
Thank you, Wadaid Saab, for a very comprehensive overview of the sukuk market. And I must say that this listing of the sukuk through the Pakistan Stock Exchange and the initiative taken by the Madam Shamshad has been a very fruitful, and it has also reduced the cost of borrowing for the government of Pakistan, and a lot of new lessons that can be learned from for the international investors. I'll now quickly move to Sabzwari Saab. Based on your new role at the stock market, we hope to see new heights being achieved and development of new instrument for Islamic capital market. So for your points.
Thank you very much for the introduction. New heights is the pressure point that I've inherited all of a sudden. I thought this was a very normal MD job. So you're CEO of the exchange, they're looking for a new MD. It's not even been more than a month since I've taken over, and suddenly I've become the 100,000 points MD. So there's a lot of pressure, But the good part is, I think the discussion at every table, and I've noticed a lot of the discussion here as well, had to do with financial literacy and awareness. That's really the missing points in Pakistan. That even when I speak to the press now, because I think my first interaction officially with any organization was with the IBA. And there was a conscious effort. I want to recognize that 65% of our population is under 30 years of age. And I want to ring the bell to say the PSX acknowledges that bulge. And so my first interaction should be with an educational institution, because we want to embed some portion of the capital market into syllabuses that are being taught in every university and college. So it was a good start, I thought. And I'm really, really thankful to all the delegates who are from abroad. So yesterday we had the gong ceremony at the exchange. Thank you, Dr. Okama, for being gentle with the gong. Because when I handed you the gong, I was like, okay, I need earmuffs. So thank you for being gentle. But so around the table yesterday also, apart from awareness and education, which is really key to any discussion, the pressure is really on us now, on the exchange. So what we are used to doing maybe is we clearly do a lot of awareness sessions, a lot of webinars, a lot of going to universities and colleges. So a lot of people have been trained. And they do accept that we do a very good job of being in their face on financial awareness and literacy. And what we really need to focus on, and the press is all over me saying, please commit a number. So 365,000 is what the number is today of UINs, which is individual investors. The number is much higher, by the way, so we have good news as well, because the number is 650 odd, or in fact more, in the asset management business, and growing on a daily basis. And we don't mind. I think individuals coming through the mutual funds, they find that's their first port of call, more than welcome. So it's a great number. And I will talk more about this as well. I think we're given suddenly that base that the market wanted. We have to recognize, and I'm very cognizant as the incoming MD, there can be no discussion around new listings or new investors if there is no macro stability that you have in the background. So I've been cross-questioned a lot by the press saying, this 100,000 points is being driven by only 3 individuals or 7 individuals, and that the stock market is a den of only 12 people, and they drive the market. So what are these 675,000 investors in mutual funds? They need to be told, that's one, that that's the number in mutual funds, and that the number in terms of assets under management has grown considerably. It's now 3 trillion rupees that they manage. Sure, 80% of it is parked into debt, but then when the risk-free instruments are giving you 20% or more, I mean, it's a no-brainer. Today, unfortunately, because of the turn in policy rate and inflation has played a very good role. In fact, all macro indicators clearly are playing a very good role. So I do want to mention today, this is for the benefit of people who are naysayers and who've been saying, oh, this is a rally based on 7 people. The indicators that the market is discounting already, because markets tend to be forward-looking, are playing out in the OICCI survey. If you've all looked at that survey, all the indicators are pointing north, just like the Karachi Stock Exchanges. So our challenge really is to increase the investor base. Awareness, education is what we are doing. I'm really glad to see our friends from Turkey. So whenever we sit down as a team at the PSX, and we've done tons of searching on data on what other bourses have done, the Turkish bourse has been one successful bourse that we've looked at, and we are studying in some depth. They're doing exactly what the doctor ordered to the PSX as well. We need to engage with our trade bodies. We need to engage with our associations. We need to talk about elementary finance and not CFA level 1 or 2 with incoming investors, which I think is really the problem. So you want to include students or people who are not from finance into the financial markets. The finance discussion needs to be very elementary, and I think it's a little more advanced. So that all we are also taking in. And as I said, there can be no discussion really at any table with any new lister when the PE of your market is at 5. I mean, you're trying to place your blood, sweat, and tears of building a business and then giving it to the public at 5 times earnings. It's a very difficult sell. But we can have that discussion. It's a more palatable discussion when that PE ratio is 8, which is what our historical number is, or higher. And given the base that the asset management industry has already built, I'm fairly positive that if macroeconomic stability remains as one of our biggest tailwinds, this market clearly has a lot more upside. More from a depth perspective, this is the best opportunity, I think, that the PSX has to not only enlarge the retail investor base, but also products and services on offer. I think even at the gong ceremony, there were a lot of eyebrows raised when I read out a number that 50% of our market cap is Sharia compliant. I think even today, in the audience today, I see a lot of eyebrows being raised. Are you sure that's the right number? But think about this, 70% of our trading turnover on a daily basis is actually also Sharia compliant. So all of this is news to a lot of people because we've not really done our job of creating awareness and educating people. Because I think a lot of people do not have this knowledge, and this will help them to come to the table. One additional point I do want to raise, because this is my first official, really, gathering. I hope everybody's noticed, we talk so much about ESG and sustainability and women empowerment. Thank you. I think it was Bursa Malaysia, I forget, that reminded us, or was it Nigeria? I forget. Reminded us of women empowerment, and then reminded me that in microfinance, they are the best credit in a family as well. And today, if you look at the audience today, please, it's probably 5% women in this audience. So clearly a long journey ahead. I'm just very thankful we have a woman as a chairperson. So that provides for the diversity at the table. I recall at the SECP, that's as high as 27%, if that's still that number. But then I think, thank you, Mr. Aurangzeb, who is our Honorable Finance Minister, because our policy board has an even higher number of women representatives. There is a presentation, but yet this is a very good slide to be on. So this is our journey, really, on what we need to do. So what is the way forward? Because I think we've talked enough about what the past has been. So it's a little murky because of lack of depth, lack of investor focus, lack of awareness, education. So all of that is well known. This is our journey, and this is what we need to focus on. So that also highlights, as you can see, empowering through education, which was point number 3. So I think the future at PSX, and you will all get to hear about this, is a lot of, before I forget, because of the bulge in population, which is 65% under the age of 30, and then yesterday again at the round table, somebody mentioned, I hope we've all realized that the mobile phone is the new next of kin for the new generation. So if you're not accessible on your phone as a service provider, and your provision of service is not customizable to this new generation, then we can all say goodbye to that service. So that's really what the PSX is now cognizant of. I'm looking at also all CTIs and how they operate, plus obviously broker community. There are 190 odd brokers. How much of spending goes into digitization, into upping services that they're offering to the client base. So I was looking at UI and numbers as well. Again, we've done very little study on it, which again, I will accept is a mistake we've made, but I think I will come out with some conclusions on what we've found. I have found that the first maybe 15 or 20 brokers will account for a sizable UIN number, but that falls off a cliff and runs into hundreds only with, broker number 28 or 32. And that's what we really need to change. So this entire landscape is asking for a bit of a refresh. Just coming back to building research collaboration, investor protection, again, these are learnings from our friends overseas. If people do not make money, I mean, they will never come back. This is a risky enterprise that we call equities. So people do need to make money when they come in, and that's the learnings from other places as well. So whenever you've seen a big jump internationally in other jurisdictions, it's usually been either a household brand that you list, and we are missing out on that. So I was telling my team a few days ago as well, that we have 17 IPOs in the last 6 years or 7 years, or maybe it was 5. And we've made a 5% dent on market capitalization. It's too small. Because if I looked at the dent that our friends will talk about, it's more than 20 or 25% that they're making on their market cap every few years. And so we are looking really consciously at PSX to those middle tier and large tier companies which still choose to not look at either the GEM board or the regular board to be listed entities. So we've got a lot of work cut out for us. And I have myself also to blame. As I said, I'm giving numbers to people going, oh, I can probably take this up to 500,000 by June, which is what the number I gave to the IBA director as well. But with that, I'll close and let the other participants continue. Thank you very much.
Thank you, Farooq Saab, for a wonderful overview of what's happening in the Pakistan Stock Exchange. And I'm sure that with the power of Sharia compliant stocks, the listing is approximately 56% of the market capitalization. And if we can give this confidence to the individual that yes, you can have a Sharia compliant counter or you have a Sharia compliant mechanism to come to stock market, I think this number can be doubled easily. And we hope to do this very soon, inshallah. So I'll come to my third panel member, Mr. Se Cheong Lim. So based on your expertise at the Saudi market, I would like to invite you for your presentation and your views. Can we have the presentation on?
Thank you. Now, while waiting for the presentation, I'm going to talk about something which is not very common because it's talking about how collective investment scheme can drive technological innovation. It's not something that people talk about, but it's pretty interesting to discuss, and I hope that you find it informative. So now I'm not going to dwell too much into this. I think all of us know this. This is an old data. As of 2022, the total Islamic finance asset globally is at 4.5 trillion. It's a lot more than this. But really the slide which is interesting is that if you break down where the growth is, you will find that the Islamic mutual funds or the Islamic funds actually leads in terms of the growth. So this is pretty interesting because we always think that it's Islamic banking, we always think that it is the debt capital market. But in actual fact, the fund industry has been quietly making a lot of headways. In fact, this is, I think, the trend going forward. Now, how can then Islamic collective investment scheme drives innovation? Now, we all know that collective investment scheme means that money is being pulled from multiple investors to invest in an asset class or multiple asset classes, into equity, into sukuk or bond for the traditional assets, or into real estate, commodities for the alternative, and so forth, venture capital and PE as well. Traditionally, when you look at a collective investment scheme, it's for wealth creation. But I think now there is an opportunity for it also to drive technological innovation. So the question is how? Now, these are the various ways that I can think of. Now, the first is supporting startups. Okay, so I'm just going to jump very quickly. This is very important. Startups today, I think, are the biggest trailblazers of technological innovation because startup companies, they take risks with new ideas, they take the risks with new technology, they embrace new technology very quickly. I've seen many startups. I receive a lot of proposals from startups, and I can tell you 90% of those are technologically driven. So, and startups are always struggling to get funding and financing because obviously of the inherent risks. So a venture capital fund which focuses on investing into startups in a Sharia compliant manner would make a lot of sense to support the ecosystem. Indeed, this has already been done. In the UAE, there is a fund called ITIS. ITIS is a venture capital fund that focuses on real estate. So it's very real estate focused on real estate companies that uses cutting-edge technology to do business. So there's such company. In Saudi Arabia, there is Kawarizmi Ventures that looks at startups which are technological and innovative focused. And there is also 500 Falcons in the UAE as well, doing the same thing. But there are too few. More should be created to fund technologically driven startups through a VC fund. So this is one very important and powerful ways in which a collective investment scheme can indeed drive technological innovation, funding of the startups. The emergence of fintech opened up a whole new world, very interesting world of crowdfunding. We've been talking about crowdfunding. Crowdfunding is a form of collective investment scheme, maybe unregulated, not so regulated, a bit unstructured, but it allows for P2P lending, it allows for equity to be raised from the retail itself. And this is also very important because it democratizes large investment to smaller units where retail investors can participate in investing into companies that show great promise in technological innovation. So I think it's very important for the Islamic world to look at how crowdfunding can be further developed. It was a rage a couple of years ago, but seems to have lost a bit of momentum. But I think this is a very, very important avenues and channels because there's massive wealth on the private side. And this is one way to tap into those wealth. Real estate is one of the sectors where a lot of cutting edge and innovative solutions have emerged. Now, this is very unusual. I have not seen it done in this part of the world, but in the US, there are funds that have been created to invest directly into real estate companies that are deploying certain new technology to do its business. For example, smart technologies, Internet of Things, and so forth to do the business. So such fund has been created where it's dedicated to investing into real estate that is technologically driven, can also help to drive new innovation. REITs is a very important source of funding, and we see this in Malaysia. There is S-REIT in Malaysia, and what it does is that it invests, again, as I said, into companies or property management that uses new technology to manage the properties or new technologies to build the property itself. So REITs is a very important source of funding for the real estate sector that at the same time can also be a great source of innovation. Robo-advisory. One of the biggest developments in the asset management world is the use of algorithm for asset allocation. You can also use algorithm to identify investments that fit into the risk and return profile that you want. And it's also giving you the real-time access to the performance of the investments. So the robo-advisory world is still pretty nascent. In fact, it's not very popular, I can tell you, in Asia. It's very popular in Europe, in Canada, in the US, maybe to some parts of Europe, but it's not popular in Asia, it's not popular elsewhere. But it presents a tremendous opportunity for collective investment scheme to be integrated with the robo-advisory, where robo-advisory is used to help the fund managers choose the best possible investments for the client based on investment criteria. So with this integration, it can also help to drive innovation. Green Sukuk, I'm going to spend some time here. I think this is very interesting because we are in a capital market forum, so it's very important. Now, Green Sukuk is being gaining traction. I think you must have read Indonesia did the world's first Green Sukuk. It's a big one. Masjid Al-Futtaim did the world's first corporate Green Sukuk. And I know that I think Pakistan is talking about Green Sukuk. Yeah. Many people are talking about Green Sukuk. But the main thing is that what are you doing with the Green Sukuk? It's not so much about the issuance, it's about the deployment of the proceeds. The deployment has to go into renewable energy, of course, must go into area that support the environment, the area that doesn't harm the environment or make the environment better, for example. So green sukuk is a very powerful tool because it raises a lot of money. As you know, when you do a sukuk transactions, we're talking about $500 million as a benchmark, $1 trillion, and so forth. So this amount of money can be used into different areas where it can drive technological innovation. So this is very important. But I don't think right now this is the focus. People are not thinking in that way. But I think this is a very important source for people to remember that when you're doing a green sukuk, it can also have a double role of not harming the environment, helping the environment, but can also be deployed into areas that can promote further technological innovation. All right, so that's my brief presentation.
So,
thank you.
Thank you, Mr. Lim, for a very wonderful presentation. And I think the areas that you have very rightly highlighted, these are the new disruptors, the crowdfunding, the P2P, and I think the regulator, the stock market also need to take note that these are alternative funding channels that are being developed with the use of technology, and if we either embrace them or then otherwise they will be taking share of the market from us. And on the green sukuk side, just let me share a good news with you. Inshallah, the first green sukuk for Pakistan is planned, and we are targeting the issuance in the next 60 days. So we hope that inshallah the first sukuk of Pakistan, again it will be listed through the Pakistan Stock Exchange, and it will be, we have the green sukuk, and in Pakistan what we are doing is we are developing a green, social and sustainable sukuk framework. So it's a 3-in-1 combo framework for Pakistan, and inshallah with that help we will be able to issue green sukuk, sustainable sukuk, even social sukuk for different projects as mentioned by you. So just stay close and stay tuned to have the first issuance through the stock market. Now with this I come to Dr. Majid, mashallah, an expert for Islamic finance coming from the brotherly country of Iran. So over to you, the stage is yours for your comments. Can we have his presentation, please?
Very good. Thank you very much, Doctor. Bismillah ar-Rahman ar-Rahim. Alhamdulillah Rabbil Alameen. Wa salatu wa salam ala Sayyidina Muhammadin wa ala alihi wa sahbihi al-muntajabeen. Assalamu alaikum wa rahmatullahi wa barakatuh. I am Majid Puyanmer, and I am the head of Islamic Finance Office at the Securities and Exchange Organization of Iran. And the topic I'm going to discuss right now with you about our experience in Iran about hedging instruments and how we structured it in our capital market and how it's now working and what are the challenges and what are the opportunities. Before I start, let me tell you something interesting about Pakistan, and then the nation of Pakistan people. This is actually my third time here in this country, and the volume of opportunity and the potentials are really very high. And I really believe that if inshallah, the Pakistan government and also the Pakistan nation, they shake hands together, they will be a very productive and pioneer Islamic nation in the future. The very important point is that the Pakistan people, they rely on the benefits of themselves rather than the benefits and potential of foreigners. This is very important. And I believe that basically the sustainability element is inherent in many aspects of Pakistan, and I really enjoy it, and I hope that, inshallah, the Pakistan nation will very soon in the future will be leader of Islamic finance, both in banking and also the capital markets. The topic that I would like to share with you is about our experience in Iran about hedging instruments and Before I start, let me recite a verse of Holy Quran. أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. يا أيها الذين آمنوا لا تأكلوا أموالكم بينكم بالباطل إلا أن تكون تجارة عن تراض منكم ولا تقتلوا أنفسكم. صدق الله العلي العظيم. When we talk about ولا تقتلوا أنفسكم, it has a very important mention that if you take the benefits, if you take the properties of each other unrightfully, you will kill each other. And in terms of humanity, when we talk about the Islamic finance, it is not only something about development of the nature, but also it is very importantly rooted in the humanity. So this is a key point that I would like to mention at the beginning of my speech. I'm going to very briefly give you some points about our experience for hedging instruments, and inshallah, I hope that you find my presentation materials productive and useful. Brothers and sisters, when we talk about Islamic finance, in many cases, you will see that during the time of Holy Prophet, the Prophet was introduced many contracts which were available before the Islam, before Bi'asat. And Holy Prophet accepted many of them, refused some of them, and emphasized on the importance of corrections in some of them. For example, you will see the partnership, which is basically rooted to the time before Holy Prophet, and Prophet accepted it. Sale contract, the same. Mudaraba, the same. But when we talk about for example, gambling, the Holy Prophet refused it, did not permit it. The hedging instrument, I believe that it has the same story. Hedging by itself is not something which contradicts Sharia principles by itself. But the point is that it should be well managed and structured through Sharia compliant frameworks. So when we talk about hedging by itself is not a concept which contradicts Sharia principles. There should be very strong supervision for structuring the Sharia compliant model for hedging and also supervising the mechanism. In my presentation, as Brother Tariq Nasim, he asked me to focus on futures contract, the Sharia compliant model for futures contract. I have now emphasized on the futures, but in Iran, we have both implemented a structure of futures, Sharia compliant futures, and also Sharia compliant options model. Many of you know that after the 1979 in Iran, it is not lawful to issue any financial instrument which contradicts Sharia. So legally and in compliance with the rules and regulations, alhamdulillah, in Iran, we are actually benefiting from a non-riba, wholly Sharia compliant in terms of riba elimination framework, and inshallah we hope that in the future we will have a more developed Islamic financial model, because elimination of riba is the elementary step for realizing an Islamic finance. Islam has many more elements other than riba, elimination of riba. And inshallah, in the future, I hope that by gathering the hands and shaking the hands with our brother nation in Pakistan and also the other countries, we will enjoy from the benefits of Islam in all the aspects. So in terms of futures, you know that futures are basically rooted in conventional finance, and it is an agreement to buy or sell a specific commodity at a specific price in the future. And when we talk about Islamic terminologies, we will find a very important verse in Holy Quran. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم يا أيها الذين آمنوا لا تأكلوا أموالكم بينكم بالباطل. And also we see بسم الله الرحمن الرحيم يا أيها الذين آمنوا أوفوا بالعقود. The general aspect of أوفوا بالعقود, it says that, emphasize that if you have a contract and if the contract is in compliance with Sharia, that would be okay. So we combine two promises in Sharia compliant mode of for futures contract and with a specific determination that what is the underlying asset in such a futures contract. One of the very important different aspects of Iranian model of futures with conventional model is that the underlying asset should be halal. This is the first option. And the second option is that the underlying asset should be deliverable. It is not permitted in Iran to issue index futures because basically index is a number. It is not deliverable. What resulted to financial crisis was the huge amount of underlying assets which were not deliverable. So in Iran, we emphasize on two important factors, halal, and also the very important role of SCCP in Pakistan, inshallah, or SEO, my organization in Iran, to supervise the market. What is the volume of underlying assets in futures in comparison to the real world? And this is the other aspect. So basically in Iran, we mix two promises, a promise to sell and a promise to buy, and we structured Iranian Sharia compliant mode for hedging through the futures contract. And as I told you, basically in Iran right now we have the real commodities futures, Sharia compliant model for real commodities futures, and also the stocks, halal equities are now being the underlying asset for futures. So when I talk about Sharia compliant futures model, again, we are emphasizing on the importance of halal underlying asset. This is the first point. And the second point is deliverability. And this is a very key importance between what we see, alhamdulillah, in Iran and also, inshallah, in the other countries, in comparison to what made to the financial crisis to the West. Okay, in Iran, we began Sharia compliant futures in 2009, and later on, we moved to the equity, single stock futures, and after that, we moved to other underlying assets. And right now, still, the market for futures is under huge control by the supervisory authority in order to manage the underlying asset and also the volume of the underlying assets. Thank you very much. Jazakumullah khairan. Wassalamu alaikum wa rahmatullah.
Thank you, Dr. Majid, for insight of the Iranian market and the futures market. And you rightly mentioned that if the transaction underlying asset is halal or Sharia compliant and the transaction is a deliverable, not just an artificial transaction on an index, then a Sharia compliant futures can be structured on the promise. Thank you very much. Now, as we have, the time is running out, and I was told by the organizers to have just a rapid fire round, not give more than 1 minute to this for the answer. So I'll just start with Mr. Abdul Rahman Wadai sahab. As this global, as the Pakistan sukuk market is growing, do you see the potential for attracting non-Pakistanis to invest in this market because they look for Sharia compliant investments?
Yes, sir. I see great potential because typically the borrowing instruments issued by the governments in the developing countries have higher rates of return. So as long as your system of issuance is transparent, as long as these instruments trade on organized exchanges, investors have access to all the data, It's easy for them to get in and get out of those instruments. I believe there is huge potential. I think Pakistani government is on the right track, and I'm confident that with time, more and more foreign investors will start looking at the debt securities, the sukuks which are trading on organized exchanges in Pakistan, and there can, with time, be a host of other innovative products whose returns are linked in one way or the other to those sukuks. So I see great potential, and I foresee significant foreign investments in these instruments over time.
Thank you, and I'm sure that if we market this product correctly to the world at large, we will have a lot of attraction for the market. So Farooq Saab, just quick question for you. What innovative Sharia compliant products you are looking at the PSX to launch? Something in pipeline?
You know, if you look at the range of products already available, from REITs to ETFs, we were talking about GDS on the debt side as well. So there is a plethora of products. I think one recommendation has been an Islamic trading counter, which is separate, and that came from our Sharia focus group. I think that can be a game changer.
That's great.
Because if we are missing out on awareness and education, and people really are not aware of Sharia finance and the availability of it on the capital market, a separate counter will be beneficial. So that's a good way forward, because I'm looking at process, I'm looking at products, and I think everything else is kind of available for the moment. And then you rightly pointed out, green sukuk is also a discussion around the table already. So clearly a lot of emphasis, but maybe what the Sharia focus group has recommended is a good suggestion to go forward.
And I'm sure, thank you, this Sharia counter can greatly enhance the visibility and the acceptability of the stock market. Just to mention that I'm with Mizan Bank, and we just opened 400,000 digital accounts in this last year. So maybe if 100,000 can come to you with a Sharia compliant investment in the stock market,
so this looks like a natural good step forward.
Okay. Thank you very much.
You're welcome.
Mr. Lim, based on your technology expertise, what technology you can say that can be a game changer for capital markets? Maybe a quick tip for us?
Sure. I think what technology can do is that it can enhance transparency and, of course, improve efficiency. For one, blockchain technology, what it does is it creates immutable record keeping. Immutable means the record that's stored in the blockchain cannot be changed, cannot be altered. So it's tamper-proof and it's traceable. So what it does is that it minimizes, eliminates risk in some areas, and thereby avoiding uncertainty, which is in line with the principle of Sharia principle of Gara, to avoid uncertainty. So this is using the blockchain has already been tried. In 2018, in November 2018, a bank in Abu Dhabi called Hilal Bank, which is today part of ADCB, did a resale and settlement of $500 million worth of sukuk through a blockchain technology. Right, so that's the first in the world, and I'm hoping to see more of such issuance through a blockchain technology. One. Two, smart contracts. Now, smart contracts are self-executing contract where the terms and conditions are embedded into code in the technology itself. So if all the conditions fulfill, the contract executes itself very quickly. And smart contract is the way forward also for issuance of sukuk. We talk about simplifying the process, and one of the ways to achieve this is through a smart sukuk, which means you need to partner up with a blockchain company that knows how to do such things. Three is real-time information. Today, with the advance of technology, information should be real-time. For example, if you want to know whether the performance of the company should be real-time. One of the problems in sukuk today is that there's no transparency. After issuance is done, you do not know the health of the company until something happens. So today, with the available technology, it is possible to monitor the company on a real-time basis, so the investors will know on the day-to-day basis a deterioration in the credit before it even happens. So credit ratings are post ante, after event has happened. We want ex ante. We want to know that something is going to happen before it actually happens. So I think using just this alone would definitely enhance the sukuk market.
Great. So enhancing the information reach and transparency through technology, and again, another brilliant idea, if using this blockchain to issue sukuk and smart contracts, so maybe we can have a Pakistan blockchain sukuk, we can beat at least Binance or at least have a competitive product. So those individuals who want to go there have an option to come to invest in Pakistan. Mr. Majid, I'll come to you for the last question. I'll just took a question from your slide on the futures. As you rightly mentioned, it can be based on what? Is it also tradable in nature, or is it allowed to trade those futures of contracts?
No, no. In terms of futures, when we talk about futures, we're taking opposite position in the futures contract, like the conventional model. So actually the trader, if wants to settle off his obligation, he has to make another negative opposite position.
So it's not tradable in this?
No, no, not tradable.
So great.
But the obligation could be settled off by the offsetting.
Okay, great, great. So thank you very much. I think a very insightful panel discussion, lot of new ideas, lot of experience was on the panel, and we greatly benefited, and I hope you all have enjoyed the discussion. I request you for a round of applause for all our panel members, and thank you very much for being with us. So with these words, I'd like to hand over to Mr. Brother Farhan.
Jazakallah, Brother Ahmed, for the wonderful discussion and the honorable panelists. In order to hand over the souvenirs, if I may request, Mr. Akif Saeed. Mr. Akif Saeed, Chairman SCCP, to please present the souvenirs to the honorable speakers. Firstly, we'll be having a group photo, and then subsequently, Mr. Akif Saeed to present souvenir to Mr. Abdur Rahman Wadaij, Commissioner SECP. Big round of applause for Mr. Abdur Rahman Wadaij. Mr. Farooq H. Sabzawari, CEO of PSX. Mr. Said Xiong Lim, Chief Executive Officer, Saudi Venture Capital Investment Company. Dr. Majid Payan Meher, Head of Islamic Finance Office at Securities and Exchange Organization, Iran. Last but not the least, Mr. Ahmed Ali Siddiqui, Director IBA SIF. Thank you so very much, gentlemen. Thank you, sir. We'll now take break for the prayers and lunch, and after the lunch, we'll resume proceedings in 3 parallel breakout sessions. For prayers, we have arrangement at the outside mosque, while the lunch will be served in this hall. The first breakout session is on building a robust Islamic capital market. Strategic and structural development for resilient growth will be held in this main hall. On the other hand, the second breakout session on Islamic fintech, a catalyst for innovation, growth, and financial inclusion will be held in the ballroom. While the third breakout session on integrating sustainability in the Islamic capital markets will be held in the Shalimar Hall. We'll be regathering in around 35 minutes by 2:30 for these parallel breakout sessions. Thank you so very much.
is rich in potential, resilience, and opportunity. Despite decades of challenges, its people have shown unwavering determination and an enduring spirit. Since gaining independence 77 years ago, Pakistan has steadily carved its own path forward. The founding fathers envisioned an economy grounded in the golden principles of Islam, a vision articulated by Quaid-e-Azam Muhammad Ali Jinnah during the State Bank of Pakistan's inauguration. The adoption of Western economic theory and practice will not help us achieve our goal of creating a happy and contented people. We must work our destiny in our own way and present to the world an economic system based on true Islamic concepts of equality and social justice. Today, Pakistan is on a new growth trajectory to realize this vision. The 26th Constitutional Amendment to eliminate riba and the Federal Sharia Court's historic judgment have reinforced the nation's commitment to transforming its economy according to Islamic principles, a move aligned with the aspirations of its predominantly Muslim population. With a robust financial service industry, Pakistan is well positioned to lead the transition. Islamic financial services already constitute a significant share of both banking and non-banking sectors, including Sharia-compliant listed companies, real estate, investment trusts, mutual funds, mudarbas, and pension funds. Decades of successful transitions from conventional to Islamic frameworks have equipped regulators, industry leaders, scholars, and experts with the skills to drive this transformative journey. Pakistan has developed a thriving capital market ecosystem, playing a vital role in its economic growth. The Securities and Exchange Commission of Pakistan, as the apex regulator, has been instrumental in developing a robust legal framework, fostering market growth, and protecting investors' interests. In 2015, SECP demonstrated its commitment to global standards by volunteering for an assessment of the implementation of IOSCO's objectives and principles of securities regulation. Pakistan's 86% compliance with the said IOSCO's principles shows the robustness of its capital market infrastructures. The approval of the Securities Act in the same year further modernized Pakistan's capital markets, ensuring the efficiency and alignment with contemporary demand. The Pakistan Stock Exchange emerged as the sole national exchange in 2016, achieving significant milestones. Since then, including self-listing, the upgrade of its sophisticated electronic trading system, and major institutional and regulatory reforms. PSX is a member of the World Federation of Exchanges and is a signatory to the UN Sustainable Stock Exchange Initiative. With a market capitalization of over 45 billion and 50% of its listed stocks being Sharia compliant, PSX offers a range of Sharia compliant investment products such as indices, ETFs, REITs, mudarbas, corporate and government sukuk, and a dedicated platform of Sharia compliant trading for expatriates. More than 70% of the market value is traded in Sharia compliant stocks, demonstrating strong demand. Despite being one of the top 3 Asian markets over the last 5 years, with an impressive annualized return of over 7.5% in USD terms, it still remained one of the most undervalued markets in the region, with a low price to earning ratio of 5 times and high dividend yield of over 10%. For 3 consecutive years, 2021, 2022 and 2023, PSX has been awarded the title of Best Islamic Stock Exchange by the Global Islamic Finance Awards. In collaboration with other capital market players, PSX launched a revolutionary platform last year to help the government raise Sharia-compliant funding. The initiative has not only allowed the government to raise 5.81 billion at a lower cost than conventional borrowings, but also helped them reach a broader investment base. The Central Depository Company of Pakistan, CDC, and the National Clearing Company of Pakistan, NCCPL, provide vital capital market infrastructure. CDC is the sole depository in Pakistan and serves nearly every segment of the financial system. It holds the largest national-level database of assets over $45 billion. CDC provides fully digitized solutions such as the RDA platform to facilitate expatriates' investments, a digitalized bulk dividend payment system, and a seamless onboarding process for investors in mutual funds and various asset classes, all through multiple intermediaries in a single setup. Additionally, it acts as a share registrar for more than 300 securities. Due to its significant contribution to the financial landscape, the CEO of the CDC is honored with the esteemed position of Chairman of the Asia Pacific Central Securities Depositories Group and board member of the World Forum of Central Securities Depositories. NCCPL, on the other hand, provides clearing, settlement, and risk management services that meet global standards for all trades in the cash, derivative, and debt markets of the Pakistan Stock Exchange. Additionally, it supports intermediaries by providing value-added services, including an institutional delivery system, unique identification number, financial institution managing system, securities lending and borrowing, and national custodial services. NCCPL also provides cutting-edge platforms for both conventional and Sharia-compliant financing. It manages capital gain taxes for all listed securities, mutual funds, and commodity investments, handling the computation, collection, and deposit into the government treasury. Additionally, NCCPL serves as the centralized KYC registration organization for investors in the capital market. Pakistan embarks on this transformative journey with a strong foundation rooted in Islamic principles and driven by the resilience of its people. Together, we aim to realize a future of economic justice, innovation, and prosperity, fulfilling the vision of our founding fathers. To support this transformation, the SECP has developed a strategic action plan through extensive stakeholder consultation. The roadmap aims to modernize regulated sectors, align them with global Islamic finance standards, and meet the demands of a dynamic market. The second International Islamic Capital Market Conference will focus on the future of Islamic finance, emphasizing technological innovation and sustainability. With this forward-thinking approach, Pakistan is set to enable Islamic finance across all sectors, leveraging technology to drive growth and secure a brighter, sustainable future. Let us seize the opportunity to shape the future of Islamic capital markets in Pakistan. By embracing innovation, championing sustainability, and building a financial system that reflects our shared values, we can position Pakistan as a global leader in Islamic finance. Together, we can build a brighter, Sharia-compliant future for all. Pakistan, a nation of over 240 million, with more than 60% of its population under the age of 30, is rich in potential, resilience, and opportunity. Despite decades of challenges, its people have shown unwavering determination and an enduring spirit. Since gaining independence 77 years ago, Pakistan has steadily carved its own path forward. The founding fathers envisioned an economy grounded in the golden principles of Islam, a vision articulated by Quaid-e-Azam Muhammad Ali Jinnah during the State Bank of Pakistan's inauguration. The adoption of Western economic theory and practice will not help us achieve our goal of creating a happy and contented people. We must work our destiny in our own way and present to the world an economic system based on true Islamic concepts of equality and social justice. Today, Pakistan is on a new growth trajectory to realize this vision. The 26th Constitutional Amendment to eliminate riba and the Federal Sharia Court's historic judgment have reinforced the nation's commitment to transforming its economy according to Islamic principles, a move aligned with the aspirations of its predominantly Muslim population. With a robust financial service industry, Pakistan is well positioned.
Welcome to Al Hilal, a leading name in Pakistan's Islamic financial markets. Al Hilal Sharia Advisors has been a pioneer in Islamic finance since 2011. As experts in Sharia compliance, We guide asset management companies, REIT management firms, financial institutions, and corporate entities through Sharia audits, Sharia compliance, and product development. We are market leaders in sukuk structuring, having designed the majority of sukuk issued in Pakistan over the past 2 years. Al Hilal has played a transformative role in aligning Pakistan's financial system with State Bank's vision and the judgment of the Supreme Court. We played a key role in the historic conversion of Faisal Bank into the country's first Sharia conversion of a bank and successfully led the transition of Faisal funds into a complete Islamic asset management company.
Pakistan, a nation of over 240 million, with more than 60% of its population under the age of 30, is rich in potential, resilience, and opportunity. Despite decades of challenges, its people have shown unwavering determination and an enduring spirit. Since gaining independence 77 years ago, Pakistan has steadily carved its own path forward. The founding fathers envisioned an economy grounded in the golden principles of Islam, a vision articulated by Quaid-e-Azam Muhammad Ali Jinnah during the State Bank of Pakistan's inauguration. The adoption of Western economic theory and practice will not help us achieve our goal of creating a happy and contented people. We must work our destiny in our own way and present to the world an economic system based on true Islamic concepts of equality and social justice. Today, Pakistan is on a new growth trajectory to realize this vision. The 26th Constitutional Amendment to eliminate riba and the Federal Sharia Court's historic judgment have reinforced the nation's commitment to transforming its economy according to Islamic principles, a move aligned with the aspirations of its predominantly Muslim population. With a robust financial service industry, Pakistan is well positioned to lead the transition. Islamic financial services already constitute a significant share of both banking and non-banking sectors, including Sharia-compliant listed companies, real estate, investment trusts, mutual funds, mudarbas, and pension funds. Decades of successful transitions from conventional to Islamic frameworks have equipped regulators, industry leaders, scholars, and experts with the skills to drive this transformative journey. Pakistan has developed a thriving capital market ecosystem, playing a vital role in its economic growth. The Securities and Exchange Commission of Pakistan, as the apex regulator, has been instrumental in developing a robust legal framework.
Ladies and gentlemen, we'll soon be Conducted at Ballroom B. The topic is Islamic FinTech, a catalyst for innovation, growth, and financial inclusion. The session third will be conducted at Shalimar Hall. We have volunteers outside who will be helping you out in reaching to your required destination, whereby you have registered yourself for those sessions. The third session is integrating sustainability in the Islamic capital markets. For the session one, we have a powerful panel which will be moderated by none other than Dr. Iram Sabah, who is the Program Director at IBA CEEF, Center for Excellence in Islamic Finance. Dr. Iram Sabah, please. Then we have the man behind the show, Mr. Tariq Naseem, Head of Islamic Finance at Securities and Exchange Commission of Pakistan. Tariq Saab. If I may request all who are standing to please take your seats. Okay. Then we have Mr. Zahid Latif Khan, who's the Chief Executive Officer at ZLK Islamic. Zahid Latif Khan Saab. Zahid Saab. Then we have Mr. Asif Iqbal, who is the Head of Fund Management Department at SECP. Mr. Asif Iqbal. Then if I may request Dr. Saad Abdul Salam, who is the Head of Financial Services and Corporate Governance, SEC Nigeria, to please come on stage. Dr. Saad. I'm not getting enforcement. Okay. Thank you. And so I'll hand over the mic to Dr. Iram Sabah, who is moderating the session. And let me introduce myself. I'm also one of the panelists for this session.
Bismillahirrahmanirrahim. Assalamu alaikum and welcome to all of you. Thank you so much, Securities and Exchange Commission of Pakistan, for arranging this wonderful conference. Indeed, it is a pleasure to see wonderful, legendary people sitting in the audience. The topic of our session is basically building a robust Islamic capital market, strategic and structural developments for resilient growth. And in this panel, we have Mr. Tariq Naseem. Mr. Tariq Naseem is a fellow member of Institute of Cost and Management Accountants of Pakistan and holds degrees in Chartered Islamic Finance Professional from INSAF, Malaysia, and MS in Islamic Banking and Finance from International Islamic University, Islamabad. With over 24 years of experience in Islamic capital market, he currently serves as the head of Islamic Finance Department and Registrar Mudarba at SECP. Mr. Naseem has previously worked in various SECP departments and has been involved in numerous national and international trainings, conferences, seminars, and he is also pursuing his PhD in Islamic Banking and Finance from International Islamic University, Islamabad. Thank you so much, Mr. Tariq Naseem, for joining us. The second panelist we have is Mr. Zahid Latif Khan Saab. Mr. Zahid Latif is the founding chairman of Zahid Latif Khan Securities and first CEO of the first licensed Sharia-compliant brokerage house as well. With over 3 decades of experience, he has played a key role in the country's financial sector, serving as chairman of ISE Towers REIT Management Company and as senior vice chairman of the Pakistan Stock Brokers Association. Thank you so much, Zahid Saab. The third panelist in this panel is Mr. Farhanullah Usmani. Mr. Usmani is a certified Islamic banker and has a strong focus on Islamic capital market, Sharia-compliant funds, and Islamic finance advisory. Mr. Usmani has worked with Mizan Bank since 2005, specializing in product development, policy making, Sharia compliance, and training and development. He is a prominent speaker, visiting faculty member, and founding member of Pakistan's first Sharia-compliant stock index, KMI 30. Thank you so much, Mr. Farhanullah Usmani, for joining us. The fourth panelist for today's session is Mr. Asif Iqbal. Mr. Asif Iqbal is a senior member of ICAP, with 17 years of experience at Securities and Exchange Commission of Pakistan. In SECP, he heads the Fund Management Department. He has led key reforms in Pakistan's capital market, including stock exchange demutualization, the introduction of a liquid capital regime, and the development of leveraged products. Last but not least, we have a foreign panelist in our panel, Dr. Saad Abdus Salam. Dr. Saad Abdus Salam is the head of enforcement at the Securities and Exchange Commission, Nigeria, with over 24 years of experience in corporate governance, financial reporting, compliance, and market regulation. He has expertise in securities regulation, sustainable finance, and market development. So thank you so much, all the panelists, for joining us today. And I would like to ask first question from our foreign speaker present in the panel, that is Dr. Saad Abdus Salam. Dr. Saad, how do you see the role of standardized regulatory practices in enhancing the stability and resilience of Islamic finance and Islamic capital markets? So over to you, Dr. Saad.
Thank you, Prof. Standardization is very key and very germane in Islamic finance. Without standardization, there will now be issues of uncertainty, which is one of the prohibited elements in Islamic Sharia principles. Where you have divergent views or divergence in Sharia rulings, or you have divergence in regulations, definitely it will be difficult for us to now achieve the common goal, which the Sharia principles tend to achieve. However, one of the key issues or challenges that we are facing now at the moment is the issue of having Sharia advisors having divergent views on the same issue, when we should have a common focus, a common direction in issuing our rulings. And I'll give you an instance. I have had the opportunity of sitting at Financial Regulatory Advisory Council of Experts meeting in Nigeria, where structures of sukuk issuances are being reviewed. And even within the membership of the FRES committee, you will see arguments coming up, you will see divergence of views coming up. Sometimes the Sharia provisions will conflict with the regulatory provisions issued by the regulators. And we must have a common ground for us to succeed, for us to now achieve the goal of that meeting in ensuring that the instrument is in full compliance with Sharia principles. We must come together, we must collaborate to ensure that we harmonize all the divergent views to come up with uniform position. Now, if you look at the standard setting bodies, we have the IFSB, we have IOFI, and some other standard setting bodies. Now, we must align our positions. We must align the standards. And if you look at, even though Islamic financial institutions are required to report based on Islamic financial reporting standards, in some instances, there is need to apply certain standards like the International Financial Reporting Standards, IFRS. So we must align the two. Anytime we see any area of conflict, we must work towards addressing that. And then in standardization, we have to be sure that nobody is doing what he wants. Because where you have local regulators issuing regulations that are in conflict with each other, it will affect investments. It will affect the confidence of the investors. It will equally create a situation where you will have doubts and uncertainties, and it will be difficult to ensure adequate risk management if you do that. So whatever we do, the local regulators must come together. If the Central Bank of Nigeria is issuing regulation on Islamic financial instruments, it must work along with the capital market regulator, it must work along with the pension sector regulator, as well as the insurance sector regulator, so that we can have a common ground, so that we issue regulations that are aimed at meeting a common ground. The same thing with international regulators. Even though we have a body called IOSCO, the International Organization of Securities Commission, which is responsible for providing guidance to securities regulators, but it is not enough. We must work together. SEC Nigeria is here in Pakistan to attend this conference, which is an opportunity for us to liaise and work with the SEC of Pakistan. That will serve as a knowledge-sharing ground. It will also make us to now have that common link where before we issue any regulation, we have to expose it or consult with SEC Pakistan and other securities regulators to have their input. Because we must also look at expanding our markets beyond the borders of our countries. Investors in Pakistan will like to invest in Nigerian instruments. Nigerian investors would like to invest in Pakistani instruments. And where you have standardized regulatory practices, it will make it much easier. Everybody will be talking from the same perspective. All of us will be speaking the same language. So you will discover that when we do that, we have now made the Islamic financial market to be a global one. Thank you, Prof.
Thank you so much, Dr. Saad, for sharing it. I do agree that we need to have more knowledge-sharing sessions among the regulatory authorities. This is why we have this conference. This is the second conference for the very same reason. Now I would like to request Mr. Tariq Naseem, who is the head of Islamic Finance Department at Securities and Exchange Commission of Pakistan. Tariq Saab, you are working in this field for the last 17 years. I would like to request you if you can talk about SCCP's strategic plan for the development of robust Islamic finance ecosystem. If you can help the audience to understand what is happening at SCCP right at the moment for the promotion of Islamic finance. What are the steps? Over to you.
Thank you very much. I think our regulated sectors have a unique proposition. We have diversified regulatory segments, and therefore we have unique challenges as well. And one of the challenges that some institutions are too small and some institutions are mature enough for enhanced regulations, whereas smaller one needs relaxed regulations or enabling regulations. So to address that challenge, our strategy was from the first day is three-tiered. First, we were focusing on enabling Islamic finance in all our regulated sectors. Alhamdulillah, we achieved that. Now, Islamic finance, Islamic financial services product are available in all our regulated sectors, alhamdulillah. Secondly, now our focus is on developing these segments where Islamic finance is now available. And obviously, finally, we'll be focusing on conversion of these all regulated sectors as per the constitutional requirement and the FISI judgment. And for this, we recently got approval of a strategic plan for 2024-2026. And that strategic plan have 4 verticals that cover the range of initiatives that we need to take in the coming 3 years. And that include, obviously, first of all, under the first vertical, that is to accelerate the growth of Islamic financial services industry within our regulatory mandate. So we need to promote more acceptable products and services that will serve the financial needs of investors in our market. And first and foremost product that we are focusing on is the short-term tradable sukuk, be the sovereign short-term tradable sukuk or the corporate short-term tradable sukuk. Another thing that, that was mentioned in previous panel discussion as well, that we are trying to establish a dedicated Sharia counter where only Sharia compliant stocks can be traded. And this can be done on a spot trading and settlement cycle basis, or even on a T+2 cycle basis, or even on a hybrid of these two models. So we and stock exchange are working together to work out a model that only comprise of elements that are approved by Sharia, start from the selection of securities and then subsequent trading of that. So these are our focus in securities market. And apart from that, another initiative that is in pipeline is to introduce the concept of Waqf companies. We are focusing on social impact investments. We want to promote Islamic social finance, and we, in consultation with stakeholders, arrived at a conclusion that we need to revive this vital institution in Pakistan and connect it with the financial services industry so as to enable it to manage its financial resources in a professional manner, so as to promote the sustainability charity part of the Islamic social finance. So these are the main initiative under the first vertical. In the second vertical, obviously we are focusing on enhancing the capacity of intermediaries that actually use these products and serve the market. And for that, for the time being and under this plan, our focus is to enhance their capacity, and that can be done and that will be done, inshallah, through dedicated specialized capacity building activities, as we did yesterday, where more than 250 participants from our regulated sectors participated in 4 specialized trainings that was specifically designed for the needs of our market. Similarly, we are focusing to revitalize the potential of Institute of Financial Markets Pakistan to introduce certification programs for Sharia scholars and professionals, so that to equip them with the latest knowledge that is required for further promotion and development in the regulated sector. The third vertical is around the legal and regulatory frameworks. And that obviously is a major area there where we are focusing currently. And for that matter, many of you may have heard that SCCP has published last month a consultation paper titled the Proposed Islamic Financial Services Act. We are striving to get promulgated a law dedicated for Islamic financial services industry that we regulate at SCCP. And currently it is under public consultation stage. Apart from that, we'll certainly focusing on upgrading the regulatory and legal framework for the Mudarba company. And finally, the fourth strategic vertical is on standardization across the industry. And in this standardization drive, Alhamdulillah, SCCP has already notified all the AOF's Sharia standards as non-binding guidelines for the industry. And we introduced a staggered approach. And under that staggered approach, initially all the financial institutions within our regulated domain will be voluntarily adopting these standards. And after at least a minimum period of 3 years, the compliance will be required on comply or explain basis, and then after another period of 3 years, that can be made mandatory. Another area of standardization where we are actually working with the stakeholder is to introduce Islamic accounting standards so as to reflect the true spirit of Islamic financial transaction in the financial statements of users of funds and providers of funds. So we are still working on that on concept stage, and we hope that if industry reaches a consensus, we can also introduce and strategy for staggered approach for adoption of Islamic accounting and then subsequently auditing standards. So this is a comprehensive strategic plan available on our website, even on the web page of this conference. So I request all the participants to go through that and advise us and suggest us further areas for incorporation in that, and while we'll ensure, inshallah, implementation of the initiatives listed therein. Thank you.
Thank you so much, Tariq Naseem Saab, for sharing it. Indeed, it's a very comprehensive list, and thank you so much for doing all these things. Now I would like to request Zahid Saab. Zahid Saab, we have heard from the two regulatory authorities, one from Nigeria and one of our very own country, Pakistan. You are practitioner, you are in the industry. Can you please share about the important challenges that you face when it comes to the investment in shares? Over to you.
Bismillah ar-Rahman. Thank you very much. First of all, I would like to extend my gratitude and thanks to the Securities and Exchange Commission of Pakistan for conducting this very, very important conference and inviting me over here, because I believe that this was a robust experience, a learning experience for me. And the challenges which we were seeing in our capital markets, I'm a practitioner for the last so many years. Out of 240 million people in this country, only 350,000 people are, in the stock market. What to talk of, the Islamic stocks, which means half of the 0.25% of the entire population of this country is involved into the stock exchange. So coming to this particular subject of Islamic capital markets, Alhamdulillah, recently the SECP has granted first ever license to a stockbroker providing the set of financial service as a financial service provider. The main focus would be on the a brokerage house. So out of, as we have been discussing for the last couple of days, that out of 550 listed companies, around 51% are already Sharia compliant companies. And luckily, most of those companies are either blue chips or very profitable companies. So, and I think that people in Pakistan might not have a very good experience or a good opinion about the stock exchange, but when they will come to know about the Sharia compliant shares and their policy of dividends and the purification of dividends, then they would be more inclined toward investing in the Sharia compliant stocks. So the challenge right now is, if there are 100 companies traded in one day at Pakistan Stock Exchange, so 35 companies are probably traded in the futures market, 35 shares are traded in the intraday market, and these two segments are actually non-Sharia compliant. So neither the futures or the intraday trading is allowed in this thing. Then only 30 shares are left, and out of those 15 shares are eligible to invest. So this is one important challenge. But while listening to the different speakers, and especially from the other jurisdictions, we have come to know that there are solutions which can be provided for inclusion of these futures trade, or for that matter the day trade. It can be structured in a way that they are Sharia compliant and they can be taken care of. Then the institutional investors, the AMCs, and especially all those who are Islamic mutual funds, they should be partnered with these, so to bring in new products, for example, the ETFs and many other products. We have listened to the other jurisdictions, and they have many products. So we should be looking toward these options as well. Then there is we have gone through these challenges in last 5-6 months since the day we have received a license for the first Islamic brokerage house. The software, it was tested and screened by the Sharia advisors because it does not allow for the short sell. It does not allow for the even stop loss limit. You cannot apply a stop loss limit. So for a new investor who is accustomed with the conventional brokerage house or conventional trading system, is a new thing for him or her. So we need to educate more and more, and we need to find solution to all these challenges. So I think this is a very, very good step of this conference. I commend the efforts by the SECP, and I think it should keep on doing these sort of conferences for more and more awareness and to find the solutions to the challenges. These are the broad challenges which I can say, but there is a silver lining that now the resolve is there, not only the government of Pakistan, but of course with our regulators, be it the State Bank of Pakistan or the Securities and Exchange Commission of Pakistan. We understand that we are in the right direction, and hopefully more and more stockbrokers or financial service providers will come, and when they will create awareness among the masses, because people are inclined towards this thing, but the awareness is required. So I am very hopeful, inshallah, that things are in the right direction, and we'll be able to achieve much more progress next year. As is ZLK Islamic Financial Services, we have also, placed our goal that we will be able to do some very, very good work in 2025, inshallah. Thank you very much.
Thank you so much, Zahid Saab. We have regulatory authority representative sitting next to you. So I'm going to ask Mr. Asif Iqbal Saab. Asif Saab, we heard about Sharia compliant stock screening criteria. We heard about the problems faced by the Islamic brokerage house as well. Can you please share about the challenges faced by the regulatory authority when it comes to the implementation of Sharia compliant stock trading? So over to you, Asif Saab.
Thank you, madam. I think if you talk about the challenges, I think the foremost is obviously the lack of awareness among the investors. Because if you look at the investor base in Pakistan, it is very low when you compare it with the overall population. So that indicates that there is a lack of understanding about the
Sorry, Asif Saab, can you please keep your mic close to, yeah.
Yeah, am I audible now?
Yes.
So if you talk about the challenges, I think the foremost is the lack of awareness among the investors, because when you see the investor base of Pakistan and compare it with the total population, it is very low, which basically indicates that there is a lack of awareness about the financial products as a whole. And when you take a look at the Sharia compliance segment, then the challenge is further aggravated, because in the case of Sharia compliant product, many investors or prospective investors who want to invest in the financial market stay away from doing so because of the misconceptions or the notion that trading in the stock exchanges is not as per the Sharia principles, or it is not halal. So, and we have a population in which a large chunk of the population is religiously compliant or is motivated by or who wants to make sure that their investments and their income is from halal sources. So this poses a great challenge as to how to create awareness among the prospective investors, not only about the financial sector, but also about the permissibility and the compliance with the Sharia standards to give comfort to the investors. I think the second aspect is the capacity of the intermediaries and the competition with the conventional products. Because when you pitch a conventional product to an investor, you have to convince that investor that that product will generate good return on his or her investment. But in the case of Sharia compliant products, you have to additionally convince that investor that the investment will be in accordance with the Sharia compliance principles, and it will not be haram or not permissible as per Sharia.
So this requires for capacity building at the at the end of intermediaries also. And because they are the one who talk to the investors, they are the one who distribute the product, they are the one who pitch the investment proposal to the investors, and they are the one who respond to their day-to-day queries and their questions. So it is very important that we have intermediaries, distributors, brokers who have the requisite capacity, who have the required level of training and understanding at their end to be able to talk to the investors and resolve their concerns. I think the third aspect is the infrastructure. We have to have all the sort of building blocks in order to provide a good ecosystem for Sharia compliant stock trading. These include availability of products, availability of reliable and authentic information on a timely basis in order for the investor to make the decision and to gain that comfort that the product in which the investor is investing is actually Sharia compliant. And also the requisite functionalities such as the settlement cycle, it plays an important role for an investor, because the intraday trading, as Aisha mentioned, is not allowed or is not allowed in the Sharia compliant segment. So this also creates a challenge for the investors, and which needs to be resolved and which needs to be taken into account while we are trying to convince the investors to come towards the Sharia compliant segment. I think another important aspect is the availability of the information from the financial statements, which should be available on a timely basis and should be reliable. It not only facilitates the Sharia screening process, but it also facilitates the investors while they are taking an investment decision. Last, I would say, is the availability, because again, when you are competing with the conventional products, they have the whole developed infrastructure, they have the whole system in place, which has matured over the period of time. So in the case of, so we also need to have a proper financing product for investors who want to invest in the stock market, but they also want to avail financing just like conventional investors do, and they want to leverage their trades. So there needs to be a proper solution in place for that also, in order to provide an ecosystem and an environment which, sort of efficiently competes with the conventional products, and then sort of provides investors the comfort that the segment in which that investor is investing is at par, and it will be able to perform as efficiently as a conventional system.
Thank you so much, Asif Saab. My last question of the first round is from Mr. Farhanullah Kusmani. Mr. Farhan, you are involved in Sharia stock screening criteria's development and implementation from the industry point of view. So I would like to request you if you can share the audience about the current stats with regards to the stock screening criteria and the challenges you faced earlier as compared to today's session.
Bismillah ar-Rahman ar-Rahim. Nahmadu wa nasalli ala Rasulihil Kareem. Thank you so very much, Dr. Aram, for asking this question, and my sincere gratitude to the audience present here after such a lavish lunch. It's very difficult to sit here and listen to such discussions, but you have been resilient, so hats off to you for that. As far as this question is concerned, indeed, globally there are multiple screening criteria being used for the stock screening, and one of them, and most prevalent in Pakistan, is that is being used by the Pakistan Stock Exchange, which is called KMI 30 and KMI All-Share Index. Now, with the passage of time, of course, there are multiple elements to any stock screening area, whereby on one hand, there is an important element of Sharia compliance that is being considered while developing any screening criteria by the scholars. And on the other hand, there are certain aspects related to the controls that are dependent on the market factors and the social factors being present in that economy. So from that perspective, Pakistan being a developing economy, and things keep on changing quite frequently in Pakistan's capital market due to multiple reasons. It's not just economic, but usually sometimes it's more of political and other related issues that keeps on changing the dynamics of the market in Pakistan. So from that perspective, that plays a very important role in the screening. Initially, of course, on one hand, scholars keep on redoing the research, reevaluating the screening criteria, and come up with a better version and better controlled or screened version of the screening criteria for stocks. But on the other hand, there were certain challenges that was being faced earlier, and that was especially related to the disclosure requirement, because usually the disclosure requirements for all the listed companies does not include the requirements related to the Sharia screening. But subsequently, alhamdulillah, with the introduction of various awareness campaigns and other requirements jointly done by SECP and PSX, now it is being made mandatory to disclose certain aspects of financials that are required for a screening of any stock to evaluate its eligibility for being a Sharia compliant scrip or not. So from that perspective, I believe that has become something very important and maybe convenient for not just the stock exchange and the screening committee and members, rather for the general investors as well. But on the other hand, while being part of the team that has worked for the development of KMI 30 and subsequently KMI All Share Index, it has brought to our knowledge that still there is a big gap and huge gap or lack of understanding among masses, even the investors, about the Sharia compliant options being made available in the market. I 100% agree to what Zahid Saab has mentioned about focusing more on creating awareness among the masses that there are options available. We need to understand there is a misconception, especially in universities and young generation, about the availability of this investment avenue like exchange and stocks and equities and its related Sharia compliance. So we need to create awareness among masses. On the other hand, things are moving in the right direction with the introduction of various controls and policies and guidelines being issued by the regulator in this regard. And I personally feel that there is one aspect, and that is the controlling or regulating aspect. But more importantly, there is a hand-holding and supporting role which is being played, alhamdulillah, in Pakistan by both the regulators, that is the State Bank of Pakistan as well the Securities and Exchange Commission of Pakistan. And as a result of that, we have seen tremendous growth in those Islamic financial sectors' performance. For instance, in the mutual fund sector, we have seen, more than half of the Islamic mutual fund industry has taken over the, space of overall mutual fund industry. And similarly, the banking, it has been growing rapidly, and that's the reason why our regulators are being, awarded with the best regulators globally. So from that perspective, it's a coordinated effort whereby, mashallah, we have seen awareness being created by the educational sector, mashallah, representing IBSC. They have conducted multiple, capacity building, trainings, awareness sessions. Moreover, SECP, State Bank of Pakistan, and the industry, PSX plays a vital role whereby they have, conducted various awareness seminars and sessions. So I personally feel that things are moving in the right direction. And very rightly said in the morning, Chairman has said that, we do not want to over-control this sector, which is something that is, you have to mention a boundary, and within that boundary, you need to give some space for marketplace to play and perform well, so as to create some good, healthy competition. So I believe this is what is being done and which is resulting in the growth of the market. So I personally feel that as far as screening is concerned, things are moving in the right direction. The framework is, alhamdulillah, there. The listed companies, they are making disclosures. It's about the availability of the financial at the right time. Maybe that needs to be worked upon and requires some attention. On the other hand, dissemination of the information at the right time, because there are certain issues related to disclosure, especially in the context of Pakistan. We have circular debt issue. Now, this kind of issue needs proper disclosure in certain financial statements so as to be given due importance to it and to evaluate that aspect of that investee company while evaluating or screening the stock. So all in all, I believe, alhamdulillah, we are moving in the right direction. It's just that we need to be more focused on or more planned in the context of having a joint collaborative effort so that awareness can be created not among the investors but all the market stakeholders. So inshallah, with this we'll be able to have more share in the market in near future, inshallah.
Thank you so much, Farhan Saab. One thing we all appreciate that in today's conference, we have seen how the different regulatory authorities are collaborating with each other, and the credit goes to Securities and Exchange Commission of Pakistan for bringing all the stakeholders at one platform. So thank you so much for doing that. I do appreciate this thing because now we can discuss about different issues and challenges. We have a representation from Nigeria, Securities Commission Nigeria. Dr. Saad, my second question from you is basically, what are the trends that you see when you talk about Islamic capital market, not only in Nigeria, but all over the world, for Islamic capital market and also for Islamic finance primarily? Over to you.
Thank you, Prof. I think the interest in Islamic financial products is growing by the day. In Nigeria, we've had experience when the government of Nigeria wanted to issue the first sukuk, and the non-Muslims went to town saying that it is an attempt to Islamize the country. It took a lot of public enlightenment to now make people understand that sukuk, yes, it is premised on the principles of Sharia, but it is an investment instrument. And people invest in the instrument to make returns from the profit that will be shared. With that, it turned out that the non-Muslims are now very much interested, becoming more aware of the Islamic financial instruments, to the extent that the school my child attend is owned by a non-Muslim, but it was financed by Jaiz Bank, which is an Islamic bank, and the financing was done on the basis of Sharia principles. So interest is growing high, and anytime a sukuk is issued in Nigeria, it ends up becoming oversubscribed, to the extent that the Nigerian government that started with a low amount has now increased the amount of sukuk, the value of the sukuk it is being issued. And anytime, in fact, people will be asking, when is the next round of issuance of sukuk? Because of the belief that, yes, the Sharia principles are not to Islamize the nation, but it is talking about a complete way of life. It is talking about how your investment will become safe. And also those that are issuing now come to understand that they are facing less burden that interest-based instruments are creating for them. And then now issue of technology has come up. It is another thing. We are always talking about Islamic fintech. The younger generation, as mentioned yesterday by the DG Sec, are always on their phone, which they have now turned to their next of kin. Technology is really becoming an order of the day. People don't go to sleep early because you see somebody on his phone either reading, either making researches, or certain other things. So it is another trend, linking Islamic finance with technology. And though there is debate on whether things like cryptocurrencies and so on are compliant with the Sharia principles, but it is debatable. And there is a larger opinion now that yes, there is Islamic fintechs, Islamic crypto instruments and so on, coins and other things. And I have read a report from Malaysia on the issue of coins and so on. Even in Nigeria, I've seen some scholars trying to justify why we should take those instruments as being Islamic compliant, Sharia compliant, having met certain requirements, you know. And also, if we look at the way the Islamic finance or Islamic capital market is growing largely. In Nigeria, it started with just one mutual fund, but today you will see there are so many funds coming up that are ethical, because most people will say, oh, I would rather invest in an ethical instrument or an instrument that is Sharia compliant. And knowledge is becoming vast now. I remember 10 years back, we went to Malaysia for a program on Islamic finance, and my colleagues were saying, oh, why am I here to listen to terminologies like musharaka, mudaraba, and so on? But today, you will discover that people are going to school purposely to study Islamic finance. People are going to study Islamic banking, Islamic capital market, different aspects of the Islamic finance. So knowledge is becoming wide, knowledge is becoming vast. People are looking at it from different perspectives rather than having just looking at it from one direction that is not really what it is. So actually, there are so many modern trends that are coming up on the Islamic finance side.
Thank you so much, Dr. Saad. We do understand that currently Islamic finance assets are standing around $4.9 trillion all around the world. That is according to the Islamic Finance Stability Report from Islamic Financial Services Board. So yeah, Islamic finance is growing in all over the world, and especially in Pakistan. People are looking to Pakistan because we are going to have full-fledged Islamic financial system by December 2027. With this, I would like to request Brother Tariq Naseem, if you can share about the recent initiative of Securities and Exchange Commission of Pakistan, that is the launch of committee on the topic of Islamic capital market primarily. So over to you, Brother Tariq.
As a regulator, I think we need products that are Sharia compliant, but at the same time practical and acceptable. So for that, we need a forum to debate among the professionals the way forward, the proposed products to be refined and then brought to the public for discussion. And with this idea, this committee was formed, and this is an inclusive committee where we have academicians, practitioners, scholars from the different school of thoughts, and professionals from the major regulated sectors. And the objective is to develop products for the industry that are practical and acceptable. Secondly, we wanted to work together for the common cause to promote Islamic finance within all regulated sectors. So at the committee level, we devised a strategy for approaching different segments of the society, Sharia scholars, madaris, educational institutions, chambers, and other institutions and organizations, so as to create awareness and education about the Islamic finance, particularly relating to the sectors of SCCP regulated domain. So, Alhamdulillah, this committee has done a phenomenal job in the past as well. The first Islamic Capital Market Conference was an idea brought in and refined in this committee forum. And we hope that going forward, this committee will help us to refine the idea. For example, we are still working on the commodity murahaba product. We still want to have digital lending Sharia compliant product. We still want to have Islamic liquidity management tools for Islamic financial institutions that are currently missing. We'll be in future expanding electronic warehousing receipts segment, and we wanted to maybe in future Sharia compliant hedging instruments. So these are the areas where we think deliberations, consultation in the committee is helping us to shape the future of Islamic finance in SCCP's regulated area.
Thank you so much, Tariq Saab. Zahid Saab, I would like to request you to share about the challenges. For example, the challenge of possession qabza, when you want to sell the stock on the same day, during the same day. So if you can share about the qabza, the possession, the challenge of that, which is T+2, we still have at the moment, so you can shed some light on that. And also about the complaints by some of your clients, because you were mentioning about they complain that one day the company is Sharia compliant and the other day when they still have that stock, the company is not in the list of Sharia compliant companies. So over to you for this.
All right, thank you very much. So this is primarily related to T+2 system. So this is presently the system prevalent in the Pakistan Stock Exchange. That's why the day trade is prohibited in the Sharia compliant brokerage house. But I attended a conference day before yesterday, Imam Ahmad Raza conference, and over there there was a discussion on this particular subject, and they found a solution, and I think that now they will create a consensus among all the ulamas and the different segments so that reach a consensus. And maybe there is a requirement in slight changes in the regulations of the PSX, Pakistan Stock Exchange, with the help of Securities and Exchange Commission of Pakistan. And that's why earlier I said that through this conference I have learned that the issues have been highlighted, and then the resolution is also in the sight, and we believe that the things will be resolved pretty soon. Regarding companies coming in and getting out of the Sharia compliant threshold, this is a phenomena. I've been told that just like the eligible securities for the pledging purpose or for the futures trading purpose, there is a criteria. So is the criteria for the Islamic companies. So whenever their financial accounts are published, and if for some reason their threshold is below that, then they are automatically out. So this is again the thing which we were discussing, me and of course Asif Iqbal Sahab, that this is the awareness issue among the people. So we need to create awareness among these things. For example, I used to go to different schools and colleges, not only and also to the madaris actually, to promote the sukuks, because the sukuks listed on the Pakistan Stock Exchange is a very interesting, product, and the denomination minimum is 5,000 rupees. So I tell youngsters, between the age of maybe 18 to 25, that if a couple of students or friends go to the restaurant and they spend 5,000 rupees, and instead they can buy 5,000 rupees worth of sukuk. And if they keep on buying every month for maybe 25 years, and down the road when they will be in the age of 40, 45 years, so they will have a very, very handsome return with them by just saving 5,000 rupees. So sukuk is a very, very good product which has been listed on Pakistan Stock Exchange 1 year back. And I believe that if the new products are developed and listed on Pakistan Stock Exchange, and that too Sharia compliant, then it would be a great service for the people of Pakistan, because savings and investment both are at the lowest ebb in Pakistan. So we need to promote saving, and to convert that saving into investment is the job primarily by us and our regulators and the Pakistan Stock Exchange. Thank you.
Thank you so much, Zahid Saab. I would like to request Asif Saab, if you can just briefly share about the future of Islamic capital market in Pakistan. Over to you, Asif Saab.
Thank you, Dr. Saab. I think Tariq has elaborated quite in detail the effort which SCCP is undertaking to promote the Sharia compliance segment. I think the future prospects are extremely bright. If you just continue with the discussion we had earlier about the investor size, So the potential is obviously huge, because if you look at the population, we have a very small investor size, and the sky is the limit if we are able to tap the investors and encourage them to join the Sharia compliance segment. In addition to that, I will also like to mention that although we are in talk with the stock exchange regarding the dedicated Sharia compliance segment, we are also trying to reduce the settlement cycle from T+2 to T+1 for the entire market. But this is inevitably it is going to assist the Sharia compliance segment also because of increased liquidity, and it will address some of the concerns which I have also mentioned. So I think another key area is the fact that there is now an increasing focus or an increasing demand of the ethical financing and sustainability related projects, and the Sharia principles are closely aligned with those principles. Sharia encourages responsible financing and discourages any sort of investment or financing which basically is detrimental to the society and basically harms others, which has element of doubt in it. And it encourages the asset-based form of investments and responsible form of investments. So there is a natural alignment to them, and the foreign investors, the local investors who are now becoming increasingly aware and increasingly cognizant of the fact that the investments need to be routed towards those avenues which are more sensitive towards the sustainability related goals. So they will find a natural alignment and a natural harmonization between the project which are Sharia compliant and the project which have sustainability as one of their core objectives. So I think if you take those also into account, and the steps which SSCP and the State Bank are taking to promote the Sharia compliance segment, and the fact that at least in Pakistan, as we also discussed earlier, the need for Sharia compliant investments and products is very high. And which you can see from the size of the mutual fund segment. It is now, I think the Al-Mizan is one of the largest Sharia asset management companies in Pakistan, and I think its asset under management, they have now, I think, surpassed 600 billion. So this shows that if you provide investors with the right kind of products, with the right kind of environment, then they actually prefer the Sharia compliant modes of investments and financing. So I think by doing more, as Zahid Sahab rightly mentioned, by having more efforts concentrated towards investor awareness, integrate those efforts into our overall efforts towards increasing financial literacy and financial inclusion in the country, I think we can safely say that going forward, and by introducing new products which are Sharia compliant and which provide the investors a good way of investing into the Sharia compliant segment, so I think we have a very good future ahead for Sharia compliant financing.
Thank you so much, Asif Saab. Last question from Farhanullah Kusmani Saab. Farhan Saab, if you can share one recommendation that we need to do immediately in order to have a very robust Islamic capital market in Pakistan, what your recommendation will be?
Okay, quite challenging, but I'll try it. You know, we need to understand that in order to implement true Islamic economic system, we need to have multiple segments within an Islamic economic system, and Islamic banking is just one of them. The other major portion, as has been discussed during the day, is majority of the areas are from Islamic capital markets, and from that perspective, one important area that can promote the concept of distribution of wealth in a true essence, or the equity participatory modes, is the implementation and adoption of private equities and venture capital. Now, in order to have such kind of avenues for investment, because usually on one hand you have fixed income securities or bank deposits for one segment of the investors. On the other hand, the only participatory mode of investment that general public or even institutional investors have is the equity market. Now, there are certain other segments of the investors who are interested in investing in private equity, maybe venture capital, or in certain other innovative funds or investment avenues. From that perspective, unfortunately, we have been having a very, very long discussion about the reasons why, unfortunately, private equity is not being promoted or is being accepted as an important mode of investment. And the main reason is, unfortunately, the taxation issues being faced by private equity. So we need to take it seriously that this area of private equity and venture capital is very, very important pillar of Islamic capital market. In order to give a level playing field, we need to evaluate these issues and challenges which can be conveniently, removed and can be, provided with the level playing field so as to promote Islamic capital markets in Pakistan.
Thank you so much. Jazakallah khair. Two wonderful speakers, Tariq Naseem Saab, Zahid Latif Khan, Mr. Farhanullah Kusmani, Mr. Asif Iqbal, and Dr. Saad Abdul Salam. We are very happy that you shared your insight with the audience. Thank you so much for joining us. And here we conclude our session for today. So I would like to request MC, Mr. Farhanullah Kusmani, to take the stage. Round of applause for the speakers. Thank you so much.
Thank you so very much, Dr. Aram and the honorable panelists. If I may request Mr. Akif Saeed to present souvenirs to our, presenter, and then subsequently we can have a group photo. Sir, please, मैं आ जाता हूँ. If I may request Mr. Akif Saeed to present a souvenir to Mr. Tariq Naseem. Round of applause, not just for he being a panelist, but for the man behind the show. Mr. Zahid Latif Khan. Mr. Asif Iqbal. Dr. Saad Abdul Salam. Heavy? Okay, ji. And a little round of applause for myself. Thank you so very much, gentlemen. Thank you. Assembly session. Okay, आप जी please. Okay, बाकी आ गए? तो Okay, based on the 3 breakout sessions, we'll be having a summary being presented by the moderators for these 3 breakout sessions. The first one, whereby Dr. Iram Sabah, she's already here for the first breakout session. So if I may request Dr. Iram Sabah to maybe you may start presenting summary of the discussion that we have, and then subsequently you will be joined in by the other 2 moderators. Please, over to you.
Bismillahirrahmanirrahim. Assalamu alaikum and welcome back for the summary of our session. So in our session, we received a number of suggestions, and primarily one of the most important suggestions is basically to create awareness. So the recommendation of all the panelists is basically to create awareness about the products of Islamic finance, especially for Islamic capital market. I remember Mr. Zahid mentioned about that we have very few investors in the stock market, so we need to increase that. And also, we have a lot of potential when you talk about Islamic financial product. So the most important point mentioned is to create awareness so that we can talk about the myths that people have in their mind when it comes to Islamic banking and finance. The second point mentioned during the session is basically to have more collaboration, specifically between the regulatory authorities. So we need to have such events where we can share about the products of one country, and so that we can replicate the same innovative Islamic products in the other countries as well. The third recommendation about Islamic banking and finance, and especially for Islamic capital market, is to look at the initiatives of Securities and Exchange Commission of Pakistan, their diagnostic report, their initiatives, say for example, their consultative papers that are present on their website, for which you can give your feedback and comments as well. And the 4 pillars, 4 vertical pillars that SECP is currently working is basically on the growth acceleration for Islamic finance, having the innovative products, sustainable products, focusing on Waqf, dedicated tradability of Sukuk, innovative ideas for that, and having capacity building. So capacity building and awareness basically raised a number of times in our panel. Then the 3-tier approach used by Securities and Exchange Commission of Pakistan for the segments under their regulation was shared as well. We need to have more number of investors, but the investors are shy when they see that there is no standardized protocols for investment. When they see that there is a difference of opinion in Sharia, then they feel uncomfortable. This was mentioned by our brother from Nigeria, Dr. Saad Abdul Salam. So we need to have standardized approach when it comes to Sharia understanding, Sharia interpretation. And this lack of standardized approach basically gives the uncertainty, and the investors feel uncomfortable for that. So we need to have the knowledge base. We need to have the ease for investing from the investor's point of view. We need to have more innovative products. We need to have infrastructure, and especially the innovative products primarily for Sukuk, the commodity murabaha, liquidity management tools, and also the ease of using digital platforms for digital lending. So these are some of the recommendations from our panel for the audience. Thank you so much. So over to the MC.
Thank you so very much, Dr. Iram. If I may request Mr. Ashar Nazim, who's the Chief Executive Officer at Aeon Digital, to please come up and present the summary of his discussion with the audience.
Pleasure being here. Our session was titled How Islamic Fintechs Helping Islamic Capital Markets Grow, number 1. Number 2, become more inclusive. And number 3, become more innovative. And the panel had Azim Pirani from EFU, had Arif Lakhani from Qis Bazaar, Faraz Bandukra from Al Hilal, and Dr. Farooq Habib, who joined us as well from GCC. So some very interesting themes, and we had a number of polls as well. One important theme was around protected Pakistan. And this was about, again, takaful and how do we promote what role digital can play in raising awareness and on the distribution side. We had a number of polls, and only about 5 to 10%, only about 5 to 10% people from the audience had discretionary cover today, right? I mean, not the one provided by their companies, discretionary. Again, so the entire emphasis was that value proposition is not appreciated by the market. And Azim's point was we need to focus on that 60% of Pakistani population that is below 30 to make them realize the importance and really take it from there. And digital, especially on the distribution and the awareness side, can play a great role. On the buy now, pay later model, Arif shared some great stats. About 100, so they offer on the BNPL basis access to white goods and motorbikes and those kind of assets to people who are earning between 35,000 rupees to 70,000 rupees a month. So they are pretty much unbanked. They are the ones who are overlooked by the banks. And they've so far disbursed to about 100,000 customers, about rupees 4 billion, very successfully, and again, playing a great role in terms of promoting financial inclusion. We also discussed that the model that is practiced here in Pakistan is significantly different from what we see in other markets. But as the market matures and BNPL goes mainstream, again, that convergence should happen. A third very important point was Islamic capital markets. What is the objective and how does it align with the maqasid of Sharias as well? Is about wealth creation. And the conversation was how today Pakistan's capital markets and Islamic capital markets are helping build wealth for the masses. And of course, the numbers we've heard, right? I mean, 250,000, 500,000 people in the stock market and so forth. One of the key issues that was identified is the digital onboarding experience. And that is really turning people away. And it may sound very basic, but that was a primary factor that is keeping people away from getting more involved. The other one was fractional ownership of assets, fractional ownership of gold, fractional ownership of real estate, and retail ijara sukuk. So again, we had a poll that how many people would be willing if the per unit price is brought down to 5,000, 10,000, 50,000 rupees. And again, there was unanimity there that there is great demand if again the price point can be brought down. Again, there was a conversation around Binance and cryptos versus other asset classes. And quoting international sources, the panel shared that in Pakistan, on one side you compare 650,000 or 500,000 people who are involved in the stock market. For Binance, there are 16 million apparently Pakistanis already involved. And in the overall crypto market, 30 million plus Pakistanis with about $18 billion turnover last year. So there's something not right. And I was talking to, Mufti Irshad Bhai just now, and he was like, again, the customer onboarding experience cannot be overlooked. It's been preached for the last 3, 4, 5 years. We are missing the point. You've got to make the experience a lot easier. So fractional ownership of assets like gold, real estate, and others asset classes could really help propel innovation in Islamic capital markets. So this was the overall summary, and I'll conclude there. Yes, indeed, and there were a number. In fact, I was talking to Mufti Saab, and he said, if I walk into a university, a great start, any BBA student, young people, 40% of them are probably invested in Binance, right? Or despite it not being legal right now, cover there, etc. So again, there is a disconnect. There's a potential. There's an opportunity there for our regular asset classes. Thank you very much.
Jazakallah khair, Ashar. Thank you for not taking the name of the Mufti Saab in the university. Okay, Ji. I would like to request Ms. Khalda Habib, Executive Director, SCCP, to please come up on the stage and summarize the proceeding of our session. Ms. Khalda Habib.
Thank you, Farhan. This session was The session 3 was on integrating sustainability in the Islamic capital markets. The discussion point remained that how we can align the Islamic finance and Maqasid al-Sharia with the sustainability agenda, which has extensively been discussed in the literature. But what is the practitioner's perspective in this regard, how we can integrate? Rather, we reasserted that the sustainability agenda within the Islamic capital markets. It was discussed that Islamic capital market can play a pivotal role in sustainable financing by mobilizing private resources for climate action, gender-specific initiatives, and critical infrastructure development. Furthermore, Islamic social finance holds significant potential to address social security, healthcare, education, and poverty alleviation through innovative models and solutions. We learned from the experience of IFSB, whereby they highlighted that the institution of zakah and waqf is well established in various jurisdictions, including Indonesia. We had a strategic discussion on how multilateral development organizations, they can collaborate with capital market institutions to leverage Islamic capital markets in driving the global sustainability agenda. Emphasis was there on innovative partnership and scalable solution. So everywhere it was emphasized that we need to raise awareness on the potential of the Islamic capital market, instruments available in the market, and to simplify the available avenues. For example, it was highlighted the sukuk structure is quite a complex one. So we need to simplify the structure of such Islamic instruments and awareness raising so that public is able to use the potential of Islamic capital markets in a sustainable manner. So this was the discussion. Our panelists ranged from UNDP, Ms. Amara Durrani, Mr. Mustafa bin Umar from Islamic Development Bank, Ms. Sana Masood from Asian Development Bank, and Ms. Cindy from IFSB. So these were the discussion that we had. Thank you.
Thank you so very much. Jazakallah khair, Ashkhada. Thank you very much for the summary. If I may request Lodi Saab to please come on stage and present the souvenir. Lodi Saab. If I may request Dr. Iram Sabah, Chairperson, Islamic Capital Markets Development Committee, SECP. Please. Please. Mr. Ashar Nazam, Chief Executive Officer, Aeon Digital. Ms. Khalda Habib, Executive Director, SECP, please. And now request all panelists for a group photo, please. Thank you so very much. Thank you, please. Now for the most powerful last session of today's conference, and this session will be the presentations by the honorable scholars who are the backbone of the Islamic financial industry in Pakistan. For that, I'll start off and request Dr. Muhammad Imran Ashraf Usmani, who is the Vice President at Jamia Darul Uloom Karachi, as well as Vice Chairman of the Sharia Supervisory Board at Mizan Bank Limited. MashaAllah, he holds various international positions, has been in this industry for past approximately 27 to 28 years. If I may request Dr. Imran Usmani Sahib to come up on stage and present. Dr. Imran Usmani, please give him a big hand.
Bismillahirrahmanirrahim. Nahmaduhu wa nusalli ala rasulihil kareem. Amma ba'd. Honorable Mr. Akif Saeed Saab and distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. For today's, my topic is that what should be our process or procedure for transformation of banking system into Islamic one by 2028. So it's a very large subject and it is difficult to mention each and everything in just one go or in one session, because it needs a complete ecosystem to make. Unless or until we are able to make a complete ecosystem, it is quite difficult to transform the all Islamic banking properly. As we see, alhamdulillah, that Islamic banking has a very good success story. And we have seen that, especially from Mizan Bank, that for the last 7 years, they have won 5 times Best Banking Award, which reflects that Islamic banking is not only viable, it could be very profitable, and it has more potential than the others, as we see the past track record of that particular bank. And even the other Islamic banks and their growth rate reflects that they have a very good growth rate, and especially for their deposit side, they always have excess liquidity. For that reason, they have to invest into short-term or long-term sukuk to manage their excess liquidity. Although their sukuk maybe are at a lesser rate with conventional T-bills on conventional bonds, but still they have to invest there because having excess liquidity. One thing, as day before yesterday in the dinner of SECP in the honor of Sheikh Ibrahim Al-Khalifa was mentioned by Dr. Ishad Hussain, as well as my honorable father, Hazrat Maulana Mufti Muhammad Taqi Usmani Sahab Maddadillahum, that alhamdulillah, if we see this current Islamic banking system in a way that we have transformed from haram to halal, alhamdulillah, we have achieved. And now no interest is existing with Islamic banks, and all their products, whether they are from the liability side or for the asset side, they have been developed and very successfully experimented. So as such, for conventional banking transformation, we do not need any new products because these products have been standardized and they are followed by the IOFI Sharia standards as well. So there is no as such differences and disputes among these products. However, it has been mentioned there that so long as the objectives of Sharia is concerned, we still in the journey of towards that to achieve these objectives. And what are these objectives? The objectives should be that our distribution of wealth should be on equitable basis. It should not be like that all money of the masses goes towards few hands, towards few equity holders or too few corporates. So there are masses, if you can see, Pakistan, that maybe around 20%, we have the financial inclusion, and these 20% are those who are depositors. But who are the borrowers among them? They are maybe 0.0001% or very tiny, maybe around 300 or 400 or 500 maximum companies they are borrowing. But so long as the MSMEs or small and medium enterprises are concerned, these banks are unable to provide them in a big quantity. So still they have 3% to 5% or 6% out of total portfolio. What was the reason? Reason that in SME there is big cost is involved, high cost is involved, more data, more documentation, more resources are essential for that. And they need, the classical banks, they need a collateral-based financing. But fortunately, now the things have been changed. After coming the big data and algorithm system, we do not need as such the secured lending. If we do credit scoring properly and we could use the data of different resources, as we can have the data of the different marketplaces, we can have the data from the different payment gateways, we can have the different data from the tasdeeq or some. There are many corporations have come to provide these data. Even the banks for their deposit sides, and these depositors are either merchant or businessmen or small and medium enterprises. So we can use their data as well, that what is their behavior for using their money. So on that basis, we can assign a particular limit and for a particular time period that they could be lended for that particular purpose without having any security or any collateral. So now it is a need for Islamic banks to work innovatively and to do extra towards that how to develop these Islamic digital banking products or Islamic fintech products, or if, for example, they cannot cover all SMEs. So what they can do anchor financing. Maybe they can give to some big FMCGs, or they can give to fintech companies these financing, so that these fintech companies can be more scalable, or these FMCGs can provide financing towards their merchant, or they can sell on credit, and then we can provide the distributors or big distributors and complete supply chain financing on that basis. So by that way, we will serve the economy, we will serve the masses who are the depositors. So it will bring the closer to the objectives of Sharia, that your wealth is not going towards just few corporates, it will be spread out towards the small, medium enterprises. And by doing that, we are not only fulfilling the objectives of Sharia, it is basically compliant with the Sustainable Development Goals by UNDP, as well as SDGs from United Nations. So, and also you know that it is useful for financial inclusion and documentation of our economy. So we should try our best towards developing the products for these things. Another thing for this transformation is required is capacity building. You know that as a sailor or as a merchant, you are unable to sell any product until or unless you provide complete features of that product. It is a normal phenomena. If you cannot provide that what is the product is, so how buyer will be attracted to buy that. So as the Islamic banking product, that if we are unable to provide the all features which distinguish it from the conventional banking, so we are unable to sell these products to our market, whether on the borrowing side or on the financing side. So it is very much important to train the trainer or train the people on that basis. Another most important thing which we have to work upon is, as mentioned by on that day Mr. Irfan Siddiqui Sahab and Governor of State Bank Mr. Jameel Sahab, that we have to convert our T-bills or our treasury bonds or all commercial bonds towards the Islamic one, because until unless we have the solution for that, a viable solution for that, it is very difficult to transform the whole economy. So, in short, I would say that we will have to see out of the box, and we should try to innovate or create such products which will be closer to Sharia, closer to objectives of Sharia, as well as closer to equitable financial or economical system, as well as we have to try to produce new product for T-bills, and we should create some way to spread the right knowledge of Islamic banking products towards the masses by different ways, through our universities, through our e-learning programs, through our different NIBAF or so and so forth. So at these things which I will see that these are the most important things which we had to do for transformation. And inshallah, once we are able to do that, we would be successful, inshallah. So please make dua that may Allah subhanahu wa ta'ala accept our efforts. And inshallah, Allah subhanahu wa ta'ala will give us success and we will achieve the target, inshallah. Wa akhiru da'wana, alhamdulillahi rabbil alameen. Jazakumullah. Assalamu alaikum.
Thank you so very much, Dr. Imran Usmani Sahib. If my request to please, Imran Sahib, if you remain on the stage so that we may present you with the memento. And if I may request, Mr. Akif Saeed, sir, please come up on the stage to present the memento to Dr. Imran Usmani Sahib. Ji. Actually, Dr. Imran Usmani Sahib has a flight to catch, so unfortunately he won't be able to stay much longer, that's why. If I may request Akif Sahib to please present him. Center me please. दे दीजिए. Thank you. Thank you so very much, Anfan. Thank you, sir. Our next speaker is Professor Dr. Muhammad Tahir Mansoori. He is a scholar having more than 30 years of academic experience, having served as Professor of Sharia at the International Islamic University. He holds a PhD in Islamic Studies and an LLM in Sharia. Dr. Mansoori is an expert in Islamic commercial law, particularly Islamic finance, and has authored 13 books and over 60 articles. He has been a speaker at numerous international conferences and received several accolades, including the Presidential Award for his contribution to education. He is currently a resident Sharia Board member at Askari Bank. If I may request Dr. Tahir Mansoori sahab to please come on stage. Dr. Tahir Mansoori.
Bismillahirrahmanirrahim. Alhamdulillah Rabbil Alameen wa salatu wassalamu ala Muhammadin wa alihi wa sahbihi ajma'in. Honorable participants, Assalamu alaikum wa rahmatullahi wa barakatuh. At the outset, I like to thank SSCP and AOFE for giving me opportunity to participate in this conference and share my views. It is a matter of immense pleasure and satisfaction that SECP is actively engaged in the agenda of transitioning and transformation from conventional to Islamic financial system as dictated and directed by the Federal Shariat Court in its historic judgment in 2022. We hope that by the dawn of 2028, Pakistan economy will be free from riba and all the evils that are associated with riba. Like other segments of finance industry and financial system, the capital market, which is a theme of this today's conference, also needs to be developed and structured on Islamic principles. In this regard, certain issues need to be seriously addressed. The first and the foremost issue is that the legal and regulatory framework for stock trading, which we have today, primarily it was developed to facilitate trading from conventional perspective, Sharia was not given any consideration in it. So these laws and these regulations need to be thoroughly examined, vetted, and aligned with the principles of Sharia. I especially refer to some laws. For example, Securities Act 2015, Futures Market Act 2016, NCCPL Regulations 2018, Public Debt Act 1944. All these laws contain many provisions which are inconsistent with the Sharia. These laws need to be reviewed. These laws need to be addressed. I don't think that the proposed Islamic Financial Services Act will fill this gap. First of all, we have to, if we want to establish Tawheed, first of all, we have to cleanse Kaaba from the idols, from Buth. This is very much necessary. Two systems cannot coexist. Two systems cannot exist. We have to, first of all, examine all these laws. So this is about the laws. Another issue is that many stock trading practices, many stock trading transactions, they appear to be inconsistent with the Sharia. Yani, for example, day trading or intraday trading, short selling, margin trading, margin financing, trading in preference shares. All these trading practices, in my opinion, needs to be phased out, needs to be removed from the market gradually. Yani, for example, we give a deadline and some timeline that from this date, these products or these practices will be removed from the stock market. This is the another thing. Third thing is that Muraba shares financing. And you are aware that Muraba shares financing was developed as a product which was a Sharia compliant alternative to margin financing and margin trading. I failed to understand that Islamic banks, they were very much enthusiastic about Muraba shares financing, but why they didn't come forward to register themselves as financer and to provide patronage, assistance to this product. So it is necessary that the volume and size of margin trading or margin financing should be gradually reduced, and the size of Muraba share financing should be gradually increased. It is necessary. Third thing is about futures market. Our futures market transactions, largely they are Sharia incompatible. According to AFE, the stock futures, index futures, commodity futures, all these transactions, they are incompatible with the Sharia, and there is a need that Sharia compliant products should be developed. Tariq Naseem Saab, he's for a long time, he's working on developing a product which is deliverable commodity futures. This means that in so far as the stock futures are concerned, whether they are cash settled or they are deliverable, no, they are not acceptable in Sharia. Stock index, they are not acceptable in Sharia. So I am saying that the only product which remains is the deliverable commodity future. So I think that this should be developed so that we allow the mercantile exchange to work. Commodity muraba, you remember that in 2018, a series of commodity murabahas were executed by the Islamic banks. Commodity muraba is a borderline transaction, and it has raised many Sharia problems. The way it was practiced, it has raised many issues. And if the Securities and Exchange Commission could see, there was a Sharia audit report. Sharia audit was conducted, and it identified many issues. And what is reasonability in it? That HESCOL sells petrol or diesel for 10 million on cash to Islamic Bank number 1. Islamic Bank sells it for 11 million on credit of 1 year. Then Islamic Bank 2 sells it to HESCOL again. In 5 minutes, the transaction is completed, from HESCOL to Bank Islami number 1 to Bank Islami number 2 and then HESCOL. So I am saying that what is the reasonability? It means that at the end of day, this is just a borrowing and lending. So I am saying that this commodity muraba, this is a borderline transaction, and it should be removed. Either it should be removed from the market, or its use should be minimized. Now I come to Sharia screening criteria. In my opinion, current Sharia stock screening criteria is inconsistent with the judgment of Federal Sharia Court. Federal Sharia Court's judgment says that any amount over and above the principal amount of loan or debt, even at slightest level, it is a riba and it is prohibited. Whereas Sharia screening criteria says that a company is a Sharia compliant as long as its borrowing does not exceed interest-based borrowing does not exceed 37% of its total asset. And for example, if the total assets of a company of 1 lakh rupees, it means that you are allowed to raise interest-based borrowing up to 37,000 rupees. In the same way, you are saying that a company is a Sharia compliant as long as its interest-based lending and investment in T-bills, BIBs does not exceed 33%. I am saying that what is the justification this? It means that we are saying that we are tolerating riba, whereas Federal Sharia Court says that any amount which is over and above the principal amount, that is a riba. International Fiqh Academy has categorically, it has judged, it has ruled that a company is Sharia non-compliant if it engages in riba, even if it is 1%. So in this way, there are many issues that need to be addressed. I sincerely wish and pray that by the dawn of 2028, Pakistan economy will be free from riba, and it will be free from all forms of injustice, exploitation, and economic disparity. I wish and pray that we envision and we embrace a system in which the Islamic banks give just and fair returns to their depositors. I wish that we see and envision a system where fruits of Islamic banking and Islamic financial system do not remain limited to a small elite, which is known as Ishrafiyya, and where Sharia is not compromised, it is not twisted for mere profitability. I hope that the coming change would be genuine, it would be real, it would be value-based, it would be value-oriented, and it will lead to equitable distribution of wealth and enhancing the well-being of the society. And I think that if we fail to achieve these objectives, the people of Pakistan, they will lose their faith, trust, confidence in the whole project of Islamic economy. Thank you very much.
Thank you so very much, Dr. Saab. Please, you may take the seat. If I may request now, Mufti Ahsan Bakar Saab, who is the Member Sharia Advisory Committee, SCP, to make a presentation on future and way forward for Islamic finance in light of Federal Shariat Court judgment. Mufti Hasan Waqar Sahab.
Bismillah ar-Rahman ar-Rahim. Few things, I won't take much of the time, but what I think the way forward in light of the Federal Sharia Court decision, a very important factor is that there's a bunch of acts, ordinances, rules and laws that needs to be amended. And when we say that amendment does not mean that you just click the Control F button and replace riba, interest, sood with profit and other terminologies. The rules and the acts and the ordinances are so closely knitted that whenever there is an amendment taking place in a single act or an ordinance, that has an implication in the other rules and acts as well. If we go and change the act of borrowing and lending law, naturally that will have an effect in many other avenues where that and that related law is basically addressed. So I think that that is the biggest challenge. And earlier in a conference, I shared my experience that we came up with a product conventionally offered in a bank having a very large size of portfolio for consumer finance. And when we started doing the structure, that was very nicely built up. Theoretically, the paper was presented. Internally, the stakeholders approved that. But the counterparty, the other stakeholders involved in that structure, when the product was taken to that area, they came up with very sort of showstoppers that that is not possible to operate because our regulator does not allow this to take place or to act and operate in that manner. So looking at that example, I think that the regulators, as they are doing, they create sandboxes. And once these amendments takes place, let them operate in a pilot manner, in a pilot environment, see what are the consequences coming up, what are the implications, and then if further amendments are required, we go and do that. Before we go live in 2028. So I think so, the research side, the amendment side, that is one of the major issues that needs to be addressed. Again, product innovation. When we talk about Islamization of the economy, it is not limited to just few products and few structures. We have to think out of the box. We have to go on many complex structures and hybrid modes to come up with solutions. It is easy to say that this is not permissible. There are Sharia restrictions to this structure or this operation. But what is the alternate? The economy needs to operate, and you cannot come up with a standstill position, a showstopper. So you need to provide an alternate to the existing framework. And if that is not strictly and very strongly addressed, I think that would become a challenge again, that maybe the target, within that target, I don't think so that would happen. Again, all the stakeholders needs to come in, and they would need to do a pilot testing of all these structures, products, having operating in a pilot mode, seeing how does it respond, and then taking it to the live situation. capacity building, again, this is another major area which I think, and capacity building is not limited to the end user. All the stakeholders, be it the regulator, be it the Sharia scholars, be it the bankers, the professionals, and be it the end user, the public, the general public, be it the khutaba and the aima of the masajid, they all need to be on board, and they need to understand that the offerings that are being made is very much Sharia compliant. And there has to be a very healthy discussion again, a common forum where we can come and discuss things. Any stakeholder having any apprehension about, we can sort out. And we should also value the opinions of others. There might be differences, and there will be differences again, but we have to accommodate, and we have to live with that. And that is the beauty which I think Islam has provided, that this differences of opinion basically creates opportunities, options to operate. So I think these are the few areas that needs to be addressed seriously. Again, the role of the regulator, especially when we talk about banking, what would be the role of the central bank in terms of macroeconomics, the OMOs, the open market operations, and setting up the benchmarks. So how would they come up with alternates, and what would be the impact again when we talk about the entire economy? Thank you very much, Ji.
Thank you so very much, Mufti Hasan Waqar Sahab. If I may, I request Dr. Mufti Irshad Ahmed Ijaz Sahab, who is the chairman of the Sharia Advisory Committee as SECP, and as well as the chairman Sharia Advisory Committee of State Bank of Pakistan, to please address.
Bismillahirrahmanirrahim. Nahmadu wa nusalli ala Rasulil Kareem. His Excellency Akif Saeed Sahab, Chairman SECP, Commissioners, distinguished guests, Assalamu alaikum wa rahmatullah. And because I am the last person to speak, I will not take a lot of time. I try to take only 5 minutes. A lot of things have been said. Our respectable speakers from the morning, and especially in this session, have spoken a lot. And I will try to emphasize only on 3 points that I think after the Federal Shariat Court, these 3 important steps are necessary for the conversion and for the Islamization of the economy. And I think this is the only country in the world that is decided to convert its total economic system into Islamic one, not only the banking system, banking, non-banking, and overall economic system. So we need a lot of work. So I think this would be very challenging for us, not for only Islamic banks, for Islamic institutions, for SCCP, for regulators, for academicians, for scholars to work. So therefore, I think this is the first thing that is very important for us. And for the Islamization, we need to improve our structural changes are required for banking, for non-banking financial institution, for non-banking, non-financial institution, the certification, Sharia status, and other things. And also, the second thing, we need the innovative product development. We have some products, but we need some more products, especially with regards to fractionalization, as discussed in some session, parallel session, fintech-based solution. We have some P2P solutions, but we need, and also micro and nano financing. All of us are aware of the fraud and Ponzi schemes, which are very common in Pakistan. So this is another challenge in the name of Islamic finance. So we need to bring some these type of the products, ease of digital onboarding. And I think for this, we need to jointly work, as discussed by our brother Ashar Nizam as well. So this is another step that I think we need for the collaboration for that. And the third very important point, that is strengthening the system, because we don't have academic research, and we don't have the solution for monetary policy. We don't have the solution for overall economic model of the country, international borrowing, local borrowing. So I think the work for strengthening the overall system, work for the governance model framework, these are very important. Introduction of laws, all of us are aware the Federal Sharia Court decision and recent the amendment in the Constitution, by which we are supposed to change our system by the start of 2028, 1st January 2028. But there are a lot of operational laws which are required. Changes are required in banking and non-banking system, taxation law, arbitration law. So all these homeworks are necessary for the conversion, and I'm not sure that whether the work on these laws, these operational laws, these regulations have started or not. But so far as I'm aware that there is a need for a lot of the attention, operational law framework, and also the academic research. I'm aware of many researches that are being conducted in some Islamic universities and some Islamic finance department, and they are generally behavioral research. But if you ask any student the question about the possible alternate of monetary policy in the country, or the possible alternate of interest rate in the country, or the possible alternate of the whole system of local borrowing, public debt, international debt, so we need a lot of research. And also some basic infrastructural institution, we required some changes in that. For example, a stock exchange, CDC, Central Depository Company, and also NCCPL, and also SCCP, State Bank. On all these institutions, we require some specific attention for the conversion of the economy. So the summary that I would like to say here, that the decision of the Federal Sharia Code or the constitutional amendments are not sufficient for the changing of the system. We have to do a lot of work. And just by threatening that we are nearing to the deadline by the Constitution or by the court, I think this is not sufficient. But we need to do collective work at university level, at madrasa level, at regulator level, at parliamentarian level, at judicial level, so that the system can be changed in this given time. So these are some of points that I would like to address. And thanks for Securities and Exchange Commission for arranging this very good, beneficial, and I think one of the international standard conference. This is the second conference. I congratulate all those who have participated in this conference. Thank you very much.
Thank you so very much, Mufti Irshad Ahmed Ijaz Sahab. Now for the vote of thanks, if I may request Ms. Musarrat Jabeen to please come up on stage. She's the Executive Director, Chairman Secretariat at Securities and Exchange Commission of Pakistan. Ms. Musarrat Jabeen.
Bismillahirrahmanirrahim and Assalamu alaikum everyone. Although I see majority of the hall empty here, but speaking after the eminent professionals and especially after Mansoori Saab and after Mufti Irshad Saab, I'm really scared. I think there is a lot of work actually coming up to the SCCP and to the regulators. In particular, actually, the entire transformation of the capital market to a Sharia compliant capital market. Nonetheless, just an absolutely pleased to be here and having the podium, even if it is for just a few minutes, saying just a vote of thanks. So I extend my deepest gratitude to our hosting partners, AOFI and International Islamic Development Bank, whose partnership has definitely been instrumental in making this conference a reality. So AFE remains instrumental in executing the idea of Islamic capital conferences and honoring Pakistan for the holding of these conferences also. So apart from the capacity building activities, we are very keen on contributing towards AOFE's work streams through our Joint Research and Development Center. And we are really honored and grateful to His Excellency Sheikh Ibrahim bin Khalifa Al Khalifa. He's not present in the room, but also with regards to his comments in terms of bringing in gender equality and supporting also the SCCP's initiative with regards to the Women Empowerment Package. I also am grateful to the Institute of this is the International Islamic Institute, International Islamic Institute, basically of the Islamic Development Bank, International Islamic Development Bank's partnership, and support for this conference is definitely something which is invaluable. And the Honorable Dr. Sami Al-Suwailim not only supported this conference, but also participated as a speaker and as a panelist. So we look forward to continue this partnership for the development of Islamic finance industry globally and of course in the case of Pakistan. I'm also very grateful to our local partners, Pakistan Stock Exchange, the Central Depository, the National Clearing Company, and for the usual support. Dr. Shamshad is not here, but Dr. Shamshad Akhtar, Mr. Farooq Sabzwari, Mr. Imran Ahmed, Badiuddin Akbar, and their teams. And I would also like to acknowledge the valuable support given by Pakistan Stockbrokers Association, Bilal Zardisa, the NBFI and Mudarba Association, Mutual Fund Association of Pakistan, and I would also like to thank our academic partners, the Institute of Management Sciences Peshawar, CEIF, LUMS, and IBA CEIF for advancing research, education, and capacity building in the Islamic finance. Similarly, I would like to also thank our knowledge partners, including IFMP and the Bahrain Institute of Banking and Finance and Cambridge IFA. I think whose insights and definitely contribution and experience has significantly supported in the success of this conference. Our special thanks also go to our social media partners, the Investor Launch and Sarmaya Financials. We also greatly appreciate the Committee for Development of Islamic Capital Market chaired by Dr. Iram Sabah for its thoughtful guidance and valuable input. In the end, I must acknowledge the tireless efforts of our own team at the Islamic Finance Department at the SCCP, especially led by Ms. Khalda Habib, Tariq Naseem, Asad Ali, Muid, Malik Asif, Omar Tausif, Taqir Sipra, and others. Finally, a big thanks also to our participants and attendees, of course, who joined us from across the globe. Your engagement and your questions to this, various sessions of this conference made this conference actually vibrant and impactful. As we reflect on the key takeaways from the conference, it is definitely very clear that the road for Islamic development in Pakistan has a lot of potential. And among the critical themes discussed were the necessity of fostering innovation to create a Sharia-based financial products, enhancing cross-border collaborations to unify the standards, and leveraging digital technology to increase accessibility and transparency. So looking forward, it is imperative that we strengthen the regulatory frameworks as the regulators. We build the capacity and education research and also develop sustainable financial instruments that align with the principles of Maqsad al-Sharia. So by doing so, we expect that we can position the Islamic capital market as a cornerstone for ethical as well as inclusive economic growth in Pakistan. So thank you very much, everyone. Thank you for your contributions and making this a successful conference. Thank you. Just move into it.
Thank you, Ms. Zabeen. Taking this opportunity, I would also like to mention the name of one partner, that is TerraBiz, for their amazing work. They have been instrumental in organizing this expo as well as this conference. The team was working late night. Last night I was with them. So, I mean, a big round of applause for TerraBiz and the whole team. Now, if I may request Mr. Mujtaba Lodi Sahab to please come on stage. Mr. Abdur Rahman Vadai Sahab, please come on stage. Zishan Rahman Khatak Sahab. Dr. Agama. Dr. Mughis, Dr. Iram Sabah, Ms. Khalda Habib Sahib, Mr. Tariq Naseem, And last but not the least, Mr. Akif Saeed sir. Please, this way, sir, please. Okay. For the presentation of souvenir, if I may request Dr. Agama to present the souvenir to Dr. Agama to present souvenir to Dr. Tahir Mansoori, please. Dr. Tahir Mansoori. Mufti Ehsan Waqar Ahmed Saab. Dr. Agama, please present the souvenir to Mufti Ehsan Waqar Saab. Dr. Agama to present souvenir to Mufti Dr. Irshad Ahmed Ijaz Saab. Taking this opportunity, I would like to invite Mr. Tariq Naseem. Okay. Dr. Agama, please present the word of souvenir to Madam Musarrat Javeen. Okay. Okay. There are certain other souvenirs that needs to be presented to the organizing team and other supporters, for which I would request Mr. Tariq Naseem to call up their name.
Bismillah ar-Rahman ar-Rahim. So I would request this representative of our sponsors, the representative from Pakistan Stock Exchange, National Clearing Company of Pakistan, Central Depository Company of Pakistan, Mudarba Association, Stock Broker Association. Please, representative from each of the entity are requested to please come on stage to receive souvenir on behalf of their respective institution. Pakistan Stock Exchange, NCCPL, CDC, MUFAP, NBFI, Mudarba Association, Pakistan Stock Broker Association. Representative from Terrabiz, our partner in the Islamic Finance Expo. Please. May I request honorable commissioners and chairman to hand over the souvenirs to the representative of respective institution. Please. लेते जाएं, आगे ले जाएं. China, please ask. I would request the representative to come one by one to collect the souvenirs, please. The representative receiving award is from CDC Pakistan. And after that, I would request the organizing team from CDC, Farooq Saab, Taha, Basit, and from SCCP, I would request our Director, Media, Afan Haider Saab, and my team from Islamic Finance Department, Muhammad Asad Ali, Malik Asif Kareem Awan, Muhammad Umar, Tokir Sipra, and Tosif Rahman. Mr. Deepak Kumar, Mr. Harun Rashid, Mr. Muhammad Ahmed from IT department, please. I would also request Brother Amir Musa from IOFI, the coordinating member, Mughis, Dr. Mughis from IOFI. You are already there. Okay. I would request Harun to receive two souvenirs, one for him and one for other colleague. Waqar Haider from the IT development team, who remain instrumental for developing the ICM portal for this conference. Mr. Ahmed will also receive two souvenirs, one on his own behalf and one on behalf of Mr. Azim from the development team of IT. I would request Madam Musarrat to receive a souvenir of Afam Haider Saab, Director Media. And finally, my dear brother from Bahrain, Maril Musa from IOFI, and Dr. Mughis Shaukat from IOFI team. And with this, we conclude this second International Islamic Capital Market Conference. I request all the participants who are seated in this hall to join us on stage for photographs with the management and with Islamic Finance Department team and organizing team. You are also requested to stay on stage. Kindly, anyone you may like to join us for the photograph. Dr. Mohammed Bey, please come on stage to join us for photographs. Brother Mustafa, may you join, please. Dr. Sumaya. Brother Umar Mustafa Ansari. Dr. Saad, please. Zahir Latif Saab. All participants are requested. They may also join the group photograph to mark this event and to conclude the
final photo session. Thank you.